Good evening, dear viewers. It is my pleasure to warmly welcome you to the next webinar from Goldvorsorg, titled Everything Digital Except Gold. My name is Jepan Pilic. I will be your host for today's live event. It's great to have you with us again. Today, we are discussing a topic that could hardly be more relevant and yet is still completely underestimated by many people: the increasing digitalization of our everyday lives and our monetary system. Our title today gets straight to the point: Everything Digital Except Gold. Because while more and more areas of our lives are becoming digitalized, networked, and controllable, one crucial question arises: what actually remains truly independent? We, just like many of our long-standing customers, have not only recently started preparing for exactly this change, and right now it is becoming clear just how important this foresight is. We are talking about the digital euro, and why this new monetary system could make you even more dependent in the future than is already the case today. We will then take a look at what happens when digital identities suddenly become a prerequisite for everyday life. Another point that is often underestimated: artificial intelligence. AI already knows more about us today than many people realize. At the same time, we are witnessing new trends like digital commodities, which are being marketed as the next big opportunity. But what is really behind it? And while all this is happening in the background, the global political situation is also continuing to escalate. The Iran conflict and the role of the USA are already casting their shadows over the markets, especially on the gold price, which has dropped sharply in the past few days and weeks. On top of that, there is an inflation surprise that many did not expect, and a possible oil price shock which could have far-reaching consequences for the economy and for wealth. So you can see the topics today are really complex. They even overlap and, above all, affect all of us personally and directly. And that's exactly why it's more important today than ever, not just to follow headlines or be guided by short-term trends, but to understand developments in the bigger picture. Because one thing is clear: the world is becoming more digital, but real values cannot be digitized. What this means for you specifically and which strategies are now crucial will be explained to you step by step by our experts throughout the webinar. And with that, let's get started right away with our first expert. He is someone who has accompanied many of our clients for years, and he stands for clear, well-founded assessments in the field of wealth protection. With his experience in secure storage and professional warehousing solutions, he is an important contact when it comes to safeguarding assets for the long term. Good evening, Mr. Trinker.
Greetings from Vienna, and thank you for watching.
Next, I would like to welcome someone who leads and is responsible for our wholesale division and who has been observing the precious metals market for years from a deep and insightful perspective. He not only knows the current trends, but above all understands the structures and dynamics that make these developments possible in the first place. Mr. Dragulevic, good evening.
A very good evening to all viewers. I'm already looking forward to the journey into the future that we will present to you today. So sit back and enjoy the evening with us. We will not disappoint them.
Yes, and many are of course expecting the voice that is known in German-speaking countries and that many of you are already waiting for: Marc Friedrich. But before we delve into his presentation, a very brief note for all new viewers who may be joining our webinar for the first time today. Use the private chat function at any time. You can always find it in the top right corner of your screen. Our team collects your questions, and at the end, our experts will answer as many of them as possible. And if you would like a consultation today or want to place an order, our hotline is staffed continuously and will be displayed regularly. And we have prepared something else for you today: an interactive round of surveys which we will display repeatedly throughout the evening. With just one click, you can participate directly. And the exciting thing about it is that you immediately see the overall results from our entire community. That means you not only have your own opinion confirmed or challenged, but you also see live how thousands of other viewers assess the current developments. Often, completely new perspectives emerge from this, and that's exactly what makes these surveys so valuable for you. So when the surveys pop up, just take a moment to vote. At the same time, you benefit from a glimpse into the minds of our entire community. So now the time has come. A real highlight of our evening tonight. He is a best-selling author, a sought-after financial expert, and someone who knows about developments, often years in advance. Millions follow his analyses, and today he has prepared an exclusive contribution for us. Sit back and relax. Here is Marc Friedrich, and we'll start right away with his first blog.
A warm welcome to the webinar from GVS and Friedrich Strategy, Friedrich and Partner. My name is Marc Friedrich. Today we are talking about a very important, essential topic, namely, yes, everything is digital except gold. That's the title of today's webinar. We are living in historic times. I think we all sense that we are experiencing a paradigm shift. A turning point is in full swing, and the world is changing at a rapid pace right now. And that applies whether it's geopolitically, economically, or digitally through artificial intelligence and digitalization. And you have to adapt, not just yourself, but also your portfolio, your investments, because the things that used to work no longer do. And that's exactly what I want to prepare people for, so that they don't get run over, so that they don't lose their purchasing power. Before we get into the heart of the matter, of course, a quick legal disclaimer, the legal notice. Enjoy reading, but be quick, because I'm going to continue right away. I've brought an exciting journey for you. Altogether, there are 4 stops on this ride through the new digital world. First, we'll take a look together at why our monetary system is at a turning point. And I believe the gold price speaks for itself, but of course, so does inflation. Then we'll look at the possible negative consequences, because every coin has 2 sides, and it could end up in a digital euro, in a digital dictatorship. And that would basically be the Orwellian nightmare with complete surveillance. Then in the third point, we'll look at why inflation. It's not just a hidden tax, but actually steals your lifetime. And last but not least, of course, what is coming our way with regard to the middle class concerning expropriation, taxation, and of course, what should you do with your money in the future? Capital flight. In other words, a digital exit strategy, or in general, Plan B. A brief word about myself. As you can see, I am not older than 26 years. You can hear it. I am a Swabian and an economist. That's quite a volatile combination, of course. I've written a total of 7 books, all of them bestsellers with over 1 million copies sold in terms of circulation. And I've always tried to break everything down in my books so that everyone can understand it with maximum added value. And I am very grateful and humble that this is indeed the case. I am a financial expert. I am a fee-based advisor. So I also advise companies and private individuals on their allocation, how to position themselves in times like these, in times of paradigm shifts, in order to protect their capital. A total of 4 companies, a YouTube channel with almost 700,000 subscribers, and feel free to check out my website. If you want more content, I think everyone can feel it. Money slips through our fingers. It has less and less purchasing power. You notice it when shopping, when filling up your car, no matter where or how. Everything has become more expensive. And unfortunately, wages have not risen as much as inflation. And our monetary system is at a historic turning point. And as I said, if you look outside, you can already see the first signs. For example, an all-time high in gold signals only one thing, namely that we are seeing an all-time low in the monetary system. So it doesn't matter whether it's in francs, dollars, or euros. It's not that gold is actually becoming more expensive, but rather it just shows that the purchasing power of the euro is declining. And in my opinion, our current monetary system is in a dying process, which of course people are trying to prolong. And yes, the age of tangible assets has begun. You have to invest in tangible assets because in the future, we will have to pump more and more liquidity into the system to keep it running. And when more money enters the system, that means inflation. And always remember, monetary systems have always died from inflation in the past, never from deflation. And in my opinion, now, of course, due to the Iran war, but also because of the mountains of debt, we will see a second wave of inflation. And then the central banks will have to act. Then they'll have to step on the gas again. They'll have to lower interest rates. Then liquidity, that is money, will flow into the system. And then all limited assets will be lifted in value, so to speak, by the flood of money and will thereby become more valuable. And it will take even more purchasing power from us. So the euro will be worth less because in the future, you'll simply get less gold for it, for your hard-earned money in euros, francs, or even dollars. And an important quote from Voltaire, which I mention again and again, is of course, all people are wise, some before, some afterwards. And with this webinar, I naturally want you to be among those who become wise beforehand, that you act as a multiplier and bring as many fellow human beings as possible onto the side of foresight so that they too can take action now. Because the window of time to take action is unfortunately getting smaller and smaller. Let's take a look at the debt spiral. Debt levels worldwide are exploding. The USA only just surpassed the $39 trillion mark a few days ago. That's incredible. That means since 2010, those were the Obama years, the debt has quadrupled. Back then we were at 10 trillion, and within 16 years, it shot up to almost 40 trillion. And it just looks exponential. And we see this everywhere, whether in Austria, Switzerland, or even in Germany, the mountains of debt are exploding. And for that reason alone, central banks actually have to lower interest rates and pump even more money into the system, because with such high levels of debt, you simply can't afford a high interest rate on government debt for very long. That's simply not possible. And that will trigger a second and third wave of inflation. And of course, that will also continue to push up the value of tangible assets. I've brought an example from the past here where you can see what these debt spirals trigger, namely inflation and later even hyperinflation. And they always follow the same pattern. You can see in yellow the price fluctuations of gold in Reichsmarks, and those are wild movements both up and down. In the long run, however, it was definitely wise to simply hold on to gold, because it was also questionable whether you could get back in and even obtain physical gold at all. So you shouldn't let yourself be thrown off course by the first downward swing. You should stay true to your strategy and continue to hold on to gold. Because paper money dies, as Voltaire said, but gold will continue to retain its value. And in my view, this volatility will continue to accompany us in the coming years during the dying process of our fiat money system. I expect that we will experience a very turbulent time, probably until the beginning of the next decade. And of course, central banks will not let their fiat money system, their debt-based money system, die without a fight. And here, as I said, I've already mentioned it, the debt spiral has simply risen exponentially. It's madness. It just keeps increasing. And yes, every war is, of course, also expensive, and the US budget deficit speaks for itself. We're simply caught in a complete downward spiral of debt, and there's no improvement in sight. Even a Donald Trump will not be able to break this debt spiral. And now, on top of that, come the additional costs for this war in Iran. We're talking about billions per day here, and of course, this will continue to fuel the debt spiral. Alongside, of course, poor demographics in the US as well, though better than ours here in Western Europe. But even there, we are simply seeing negative developments. And at the same time, we are, of course, witnessing a commodity super cycle. So we see that not only central banks, but also retailers and ordinary people around the world are fleeing to the safe havens of gold or silver. But we also see that, of course, with the advance of digitalization and artificial intelligence, more and more rare earths and metals are needed for data centers, but also for renewable energy and so on, but of course also for AI in general. And this will not only require many metals, but also an enormous amount of energy. And that's why, in my opinion, we are seeing the beginning of a commodity supercycle that will last for several years. And here I also see every correction in gold or silver or in commodities in general as a buying opportunity or an entry point. We see this as well with other precious metals like platinum and palladium. And of course, the same applies to copper, which is very important for practically everything out there, or aluminum, which could also serve as a substitute for copper. Yes, let's take a look at where things are headed and where the dangers are lurking. We are seeing the digital euro and digital dictatorship, meaning central banks worldwide, including the ECB, are working on their own digital currency solutions without any real added value. It's more about natural surveillance. For example, if you are referring to Ursula von der Leyen, or Ms. Lagarde asks, what are the advantages of the digital euro, given that a large proportion of payments are made in Germany or Europe? Yes, already digital. You're met with relatively empty eyes or hear empty phrases. It's really just about controlling the flow of money and, of course, maybe also steering certain things, or rather influencing consumer behavior. Maybe at some point there will be an energy lockdown and you'll only be allowed to buy 30 euros worth of fuel, or you'll only be allowed to stay within a 20-kilometer radius. You can only buy certain things so that you don't travel or move around too much. There really are no limits to creativity in this Orwellian scenario. You could simply program this money. So for example, if you need insulin, if you're diabetic, then your digital wallet just won't work if you try to buy a cola because you're diabetic. You could come up with things like that, and even much more insidious ones. We've been seeing the fight against cash for years now, partly financed by foundations like the Bill and Melinda Gates Foundation, or even through tax payments. I've pointed this out in my second to last book. And you can clearly see that the ability to pay with cash is being increasingly criminalized. Everyone is being tarred with the same brush because as soon as you mention it, people immediately bring up crime, tax evasion, and so on. On the other hand, we also see how dependent we are on digital or electronic systems. If there's ever a power outage or if something gets hacked, then you're glad to still have a bit of cash, so to speak, in your pocket or wallet. But we've seen it even with precious metals, for example, in Germany. The cash limit for anonymous over-the-counter transactions has been reduced from 15,000 to 2,000. So that's still pretty hardcore. In France, it's also 3,000 euros. In Switzerland, it's 10,000 francs. In Austria, the limit is still higher. But the fact is, we see that the EU wants to keep limiting this further, that it disparages, stigmatizes, and criminalizes cash. And this trend is going to continue. Now, cash payments are only allowed up to 10,000 euros. And of course, these are always measures against money laundering, obviously. And at the same time, as I said, everyone is working flat out on their digital solution. And that is a very, very big danger. We absolutely have to resist this. And the only way to do that is by using as much cash as possible, really paying with cash and using cards or plastic money as little as possible. Use Apple Pay, Amazon, or PayPal as little as possible, or whatever else it's called. And then, of course, there's the danger that we might see an energy lockdown due to the Iran war, the closure of the Strait of Hormuz, or something like a repeat of the coronavirus crisis. We are already seeing rationing happening in Asian countries, for example, at the gas stations. And we're also seeing it in Slovenia. And there in Europe, after all, let's not forget that, restricting fuel purchases. And if, for example, you were to say, okay, with the digital euro, we could monitor even better how much you refuel, because then you could say, okay, cash is initially banned at gas stations and only the digital euro is allowed. And if you then refuel with your e-wallet, it's limited to a maximum of 30 euros per month, week, or day. Or there could also be energy lockdowns where they say, hey, on Monday, Tuesday, and Wednesday, you have to use public transportation or bicycles. No cars are allowed on the streets. Or like in the 1970s, when we also had car-free, Sundays, anything is possible. I once shared a thought experiment about this in a post on X. So how I could imagine it, what's already happening, where there are correlations also with the whole corona situation. Remember, because many people confuse this, the digital euro is not Bitcoin. It's a digital central bank money system that is supposed to be rolled out in a planned economy fashion. The introduction is planned actually starting next year, at the latest by 2028. And then basically every transaction will be completely transparent, traceable, can be controlled, can be programmed, can be stopped by an entity that we haven't democratically elected in any way. And we can see it. Sweden might be the negative example, although they were right about Corona. But for a long time now, they've been discrediting cash there. And now it's down to less than 1%. I was actually on vacation in Sweden myself. You can pay for every coffee with plastic there, and you almost get strange looks if you try to pay with cash. And then at any time, you could not only set a payment period or a geographical boundary. Of course, you could also simply implement negative interest rates or any kind of taxes, or even say you have to spend the money because it will expire or lose purchasing power in a few days, and so on. That would practically be a kind of demurrage money that would be implemented in order to stimulate the economy, for example. Or on the other hand, to stop the flow of money or to halt inflation. And that was also, it would be the end of anonymity, because everyone could immediately track what you buy. And the central bank would immediately know who supports a party that might not be popular in Switzerland or in Germany, who might be buying, I don't know, gold. And where could they come knocking if it comes to taxation and so on. So for that reason, cash is anonymity, cash is lived anonymity, and with the digital euro, that will be over for now. And now we come to an important topic that most people aren't aware of, that inflation is not just an additional tax, but actually steals your lifetime. And it's really essential to understand this. As Milton Friedman already said, inflation is taxation, but without legislation, without lawmakers passing anything, it comes in secretly through the back door and everyone is affected by it, whether rich or poor. And everyone should also stand up against it. We can see here, for example, that the central banks, with their increasing money supply, are actually expropriating us, because the more money there is in the system, the more money is printed, the more expensive limited goods, services, and products naturally become. And that means you basically have to run faster and faster on the hamster wheel to earn money. But wages simply aren't rising as much as debt and the money supply are increasing. And you can see that here as well. Here in yellow, we see the price of gold. So since 1970, how much it has increased from 1970 to the present. And in blue, we see the money supply M2, and we simply see a strong correlation. When the money supply increases, limited assets also rise, and so does the price of gold. And here we see inflation in the USA, as well as the loss of purchasing power of the US dollar since the introduction of the American Central Bank, the Fed, in 1913. Yes, a 97% devaluation. It's even worse, of course, if we later apply this to the euro as well. And then we also see that it is especially the middle class that is eroding, that suffers from this loss of purchasing power. Here, for example, we see real wages compared to inflation. On the left side of the image, it's incredible what's happening there. And then, of course, real estate prices as well. So housing is becoming more and more of a luxury. Hardly anyone can afford their own four walls anymore. And if they do, they have to go all in and get themselves into debt up to their necks, and then hope that nothing goes wrong, like a divorce, illness, losing their job, or whatever else could happen. And the fact is, every dollar or euro that gets newly printed, every Swiss franc that enters a new system, robs you of your lifetime, because you invest the most valuable and precious thing you have, your lifetime, to earn money. And when this stored lifetime in the form of money, no matter which currency, gets inflated, basically leveraged, then you actually lose lifetime. Because, as I said, wages don't rise as much, but the more inflation enters the system, the more you have to work. But your lifetime is limited. That means the lifetime you've already spent is then only worth 20 or 30% or even less. And that's why you simply have to protect your purchasing power. By doing so, you also protect your lifetime. And at the same time, as I said, the balance sheet total of the American Central Bank has risen from $800 billion to $9 trillion. And yes, gold has increased by nearly 8,000% since 1970. And it's the devaluation of paper money. The gold price merely signals an all-time low in paper currencies and indicates that the regime regarding the monetary system has changed. And that gold is now the new master in the house, in my opinion, and we will continue to see new highs in the coming years. That's why I see every correction in gold, silver, or commodities in general as a buying or additional buying opportunity. If you want to know which mining stocks you should invest in when the best time is to invest in commodities, then I highly recommend our Friedrich report. This is the investment newsletter for the commodity supercycle, which we created specifically for this moment after years of preparation. And now it's here, and you can already see the first results. We have, of course, outperformed the MSCI and the S&P 500. And it is completely independent and ad-free. That means you'll find the best analysis of commodity stocks as well as gold and Bitcoin. Feel free to take a look, try it out. There's a lot of added value, and all that for less than €1 per day. And the performance really speaks for itself. Let's take a look at what's ahead for small and medium-sized businesses, what's ahead for citizens, what risks are being taken, what threats are looming. And here I'd like to start again with a quote that really gets to the heart of our political leaders, namely from William Shakespeare, who said, "It is the disease of our time that madmen lead the blind." There's no other way to put it. No matter which country you look at, we are simply seeing more and more incompetent politicians who have been promoted upwards by the Peter Principle, who are subject to the Dunning-Kruger effect, and who are making one historic mistake after another. Show me a counterexample. It's really becoming unbearable. Sometimes you really think that all of this is happening on purpose. We are simply witnessing deindustrialization across the board due to a brainless energy policy, poor foreign policy, and this applies to all of Europe. In recent years, strategic decisions have always been made incorrectly, whether it was about energy, the nuclear phase-out, or which side to take when it comes to war. One bad decision after another during Corona, lockdowns, etc., and so on. So the EU and the Western states have actually been consistently wrong, always wrong. Really, hats off. That's actually an achievement in itself that you have to acknowledge at some point. And in the end, we pay the price because they just keep needing more and more money. In Germany or in Europe, we don't have a revenue problem. We have a spending problem. We can also see, for example, that over 95% of the federal government's debt packages have been misappropriated. And we see that business tax is disappearing here in Stuttgart, for example. We see that, as I said, all these wrong decisions are coming back to haunt us. 300,000. Retail stores have closed in the last few years. We see that companies are leaving. They are moving to Hungary or other countries where energy is cheap, where you can plan, where you also have the security that some new harebrained idea from some ideologues won't be forced on you overnight, and where perhaps a bit more reasonable policies are made and ideology is not placed above common sense. And that's why You need more and more money, which means more and more taxes, but also more and more levies or more and more debt. It's that simple. And then, of course, some charlatans or Germans come along. Jim Cramer, for example, Marcel Fratscher, and now they want even more taxes here, a wealth levy, rigorous taxation of real estate, even annually. So the socialists always come up with a new trick to milk the people. And more people want to leave the country as well. That's clear. 1 in 5 people in Germany is thinking about emigrating. And we even see that the union, which used to be more conservative, is now also considering a higher top tax rate. So, as I said, no matter which party, no matter what color, their only solution is always higher taxes, more levies, more debt. Of course, we are the ones who will pay for it. And elections don't seem to change anything. Why? Well, because people still, at least in part, still believe in the old narrative. We've seen it in Baden-Württemberg. 15 years of a green state government have really massively harmed the state. We are seeing enormous losses of prosperity, deindustrialization, and yet they were re-elected. Of course, it was a vote for the person, but nonetheless, nothing changes. Even if you vote for something else, you still end up with some kind of leftist socialist tangle. And in fact, nothing really changes. Truly. And at the same time, we see that the war drums, the war rhetoric are getting louder. Yes, we're talking about the war in Ukraine. We're talking about a possible war of aggression by the Russians, as if they wanted to come to Germany. And that really should give one pause for thought if perhaps a state of tension is declared. So that's really bad. And I notice it in fee-based consulting as well. As I said, by now, pretty much every client asks, where can I go? First, they send their money on its way, and then they want to leave themselves. So it's becoming more and more important to have a plan B as well if you have the means. We have information for anyone who wants to know more about it, about Plan P. That's what we call it, namely at fspanama.com. We actually analyzed all the countries and looked at which ones are the most interesting from a tax perspective for military reasons in light of the changing times, etc. And we came to the conclusion that Panama can be quite interesting. I hope this was of great value to you. If you'd like to follow me, feel free to scan the various QR codes here and sign up. Following me on X is definitely valuable. I actually write my own posts, and of course also on Instagram, YouTube, or generally through my website. If anyone would like to book me for a talk, I'd be happy to do so and to meet you all in person. I'm looking forward to your feedback. I can only urge each and every one of you once again, there will be intense, volatile, turbulent times. It's time to really take action now, no matter how much you have. Yes, every euro truly counts. And if you take action now and also choose the right partners, your children and grandchildren will one day thank you for it. Someday they'll thank you. With that in mind, stay brave, stay courageous, but take action. And it's simply about being 1 or 2 steps ahead of the rest of the crowd. Thank you very much.
All right. Thank you very much, Marc, for the first segment. There's a second one coming, dear viewers, so please stay tuned. Marc Friedrich is our guest today. How can you score points? We'll pick up on the points that Mr. Friedrich just discussed. Because when we talk about change, there's one topic we simply can't avoid: artificial intelligence. Christian, you make it very clear that AI isn't just practical. It's actually changing the very foundations of how we live together. Please walk us through that.
Yes, thank you, and good evening once again. As Marc just said, it really is a paradigm shift, a change of eras. And Marc, thank you as well for the broad perspective you've just provided on the current developments. And it's definitely dramatic. We'll dive even deeper into the details. And now we're going to take a look at some specific aspects of this entire paradigm shift.
As Deepan just announced. And of course, artificial intelligence is advancing by leaps and bounds, or rather, it's already here. In fact, for some time now, this artificial intelligence has, so to speak, moved into our lives. Ironically, one could say, in addition to natural intelligence, wherever that may be or not. But artificial intelligence is already here. And people have by and large embraced it as something very positive. People are repeatedly very impressed by what is possible. People are truly surprised what exists out there. It's almost unbelievable. But I think we need to examine and evaluate this entire situation from a much more critical perspective. So once again, I especially agree with Marc that we are in the midst of a tremendous paradigm shift. What exactly does paradigm shift mean? A paradigm shift is a fundamental change in ways of thinking and worldviews. It's a real revolution in transformation. And right now, we're only at the very beginning of a development that will go really deep. It's already deep, but it's going to get much more intense. I mean, if I think about how just 2 years ago, people were still making fun of what AI videos looked like. And because they looked a bit fake, and now sometimes I can't even tell them apart from real videos anymore. So it's getting better and better. That's how quickly this AI, this artificial intelligence, is improving. And it seems that incredible things are coming our way. But now you might wonder, what actually makes this AI so special? What is it? And actually, it's relatively simple. Artificial intelligence is so revolutionary because, unlike traditional software, it works differently. Normal programs follow fixed rules and do exactly what a developer, a programmer, has programmed them to do. AI, on the other hand, learns. It learns from data. Modern AI systems are, at their core, language and pattern learning models. Learning models. They analyze huge amounts of information from text and images to our behavior. And this is where it gets interesting, because these systems, yes, they quite literally have to be fed with enormous amounts of data. And yes, that includes your data too. You are, so to speak, the food for the AI. In fact, the more information a system receives, the better it becomes at recognizing patterns. And this information comes from our everyday lives. That is, from completely mundane things like emails, search queries you enter into Google or elsewhere, from social networks where we all expose ourselves, not literally, hopefully, but still, nothing is private anymore. Your online purchases, location data, financial transactions, everything that happens online. And the digital world produces enormous amounts of data every day about what we do and how we behave. And that is precisely the fuel of modern AI. And as a result, artificial intelligence is already astonishingly good at predicting how people will act, what they will buy, or what decisions they will make in the future. This is already being projected into the future. In other words, AI often recognizes patterns in our behavior faster and more precisely than we can ourselves. And that's why many experts say today that in the future, AI will know more about you than you do yourself. There are even studies where AI has tried to trick the programmers because it was told, that is, the AI was told, that it would be shut down. Of course, that was just a test. And now it sounds like something out of a strange bad movie where you think the AI is basically alive. But no, it's not alive. AI has no consciousness. It has no emotions and no moral intent. It simply recognized a pattern. And in the case of this test, with the shutdown, the goal was to continue to exist. And the AI tested all possible patterns and discovered something, that somewhere in some emails, the engineer who was supposed to shut it down was having an affair, and it tried to actually blackmail him. And you can read about this. It was a French AI, but it doesn't matter. This will be present in all of them, in the system itself. And now, just imagine a world in which such systems have access to more and more data, your consumption habits, your movement profiles, your financial decisions, and your conversations, all of your conversations, your communication patterns, who you talk to, when, where, how, and about what. And the more data is digitally available, the more precisely such systems can create models about people. And that's why you should really ask yourself a simple question: how much of my life or your assets actually exist solely within these digital systems? Or to put it another way, what might I be better off paying for with cash? Which eating habits end up with the insurance company because you paid with a credit card, and then that somehow gets passed along and it gets analyzed? So
it is honestly quite unsettling, but that is probably already the reality of the situation, likely even more than we currently realize. And with all of that being said, I will now hand it back over to Stirpan. We'll talk more about the digital worlds later on.
All right, Christian, thank you for your presentation. That was an interesting look at the power of data. That's really the topic here. And we can see this digital development in a completely different area as well, namely in investments. More and more people are buying gold or silver digitally these days. But what's really behind all of this? Nicola, you see every day how much confusion there is here. Please explain to us what investors really need to know.
Yes, well, I actually hear this exact question almost every day, not just from our clients, but also from my friends and acquaintances. They always say to me, Nicola, I bought gold online. What do you actually think about that? And then I immediately know we're talking about digital commodities here. Because digital, it's not just gold that's digital, but also silver. There are all sorts of digital commodities that we have. I mean, the drinker, he often asks me, how can I increase my physical reserves with AI? Unfortunately, that's not so easily possible. But let me give you an insight into what actually lies behind digital commodities. Most people actually don't know the difference between physical and digital paper gold. So I always like to start with the basics so that the fundamental concepts are understood. And nowadays, many platforms offer these so-called gold ETFs, that is paper gold contracts or exchange traded papers, to put it simply, or even digital silver tokens. Then at first, the idea actually sounds very attractive. You simply buy a digital token that, for example, represents 1 gram of gold, and everything is handled digitally, quickly, and around the clock. It's actually very simple. Many advantages, but here you really have to take a close look, because in many, or rather, in most cases, you don't actually own the raw material you bought yourself. You merely have a digital claim that somewhere gold should be stored. And between you and the actual raw material, there are several layers. On the one hand, there's the provider issuing the token, the company storing the raw material, and the platform through which this token is traded, or the gold ETF. And at first, that might not sound dramatic, but in my experience, this is exactly the crucial point. Because the more layers there are between you and an asset, the bigger the question of trust becomes. You have to trust that the raw material you bought actually exists, that it is fully backed, and that you can actually access it if necessary. And many investors don't make enough of a distinction here. For them, a digital token or a paper contract already feels as if they actually own the raw material itself. Technically speaking, that is, digitally, yes, but physically, no. And that doesn't mean, again, that the technology is bad. Quite the opposite. It's precisely this idea of tokenization that can also have advantages. Advantages? For speculation, that's always very important, because most of the speculators, the big players, as I like to call them, are exactly in these kinds of markets. Active or operating in these markets, to be precise. And commodities can be traded more easily, transactions can be processed more quickly, and even small amounts can be invested. And it's precisely because of this speed and simplicity that these big players also trade on exactly these kinds of platforms. And as already mentioned, the solution is more about speculation than genuine wealth preservation. You have to clearly distinguish between the two things: technological innovation and actual ownership. Stable, almost one of the most stable stores of value we have at all. And another problem that I point out here when you compare the digital with the physical is also the paper to physical ratio. This metric, which is also publicly accessible, describes the ratio between traded gold claims, that is the paper, and the actual physical gold available. Currently, this ratio stands at 141:1, as you can also see in this graphic. This means that theoretically there are 141 claims or holders for a single physical gold bar. Just imagine, 141 people now have to fight over one gold bar. And the question is, who actually gets this one single gold bar? And that's exactly the risk that arises here. Because if everyone were to demand delivery at the same time, the system would very quickly reach its limits. That means this number also shows how many people are active in the market. Let's just call them speculators for now. So the question is whether you want to speculate or have real security. And that's exactly why it's always worth taking a close look at investments. Who actually stores the raw material? Are there independent audits? In case of doubt, do I really have access to the physical metal? And digital commodities are certainly exciting and an exciting development.
It also works very quickly on the internet. But you also remind us that when it comes to investments, you should always understand what you actually own. So quite simply, here at GVS, we don't speculate. We only deal in physical gold and silver, and we really only trust the genuine physical assets. And between you and us, there are no other providers involved. You can call us at any time and buy, store, or withdraw your gold physically whenever you wish. And here, the physical asset is actually present.
Absolutely. Thank you, Nicola. And we'll stay on the topic of commodities. And dear viewers, take a look at the first survey. I asked the control room to display it now. Exactly. You'll find it under the interactions section. And so, which commodity is currently the most exciting for you? The result will be displayed in about 2, 3, or maybe 4 minutes. And then you can see whether your opinion matches that of the others. We'll continue with the topic of digitalization, which is the main focus of today's webinar. Many processes are also being digitalized. Processes are being interconnected. The transparent citizen is therefore becoming more and more of a reality. But why is this actually happening? That's what a lot of people are asking themselves. In practice, Christian, could you please explain this to us in more detail?
Yes, thank you. That's exactly right. The question arises, why is everything being digitalized? Earlier, I already mentioned that I have at least some concerns. With AI, you shouldn't view everything so naively. And basically, digitalization is something you can't stop. Technological progress just keeps moving forward. And when it comes to digitalization, the transparent person or transparent citizen is already a reality. Transparent in the sense of a society where more and more information about our lives is simply recorded, stored, and also analyzed digitally, and can be analyzed and is being analyzed. And so, in a way, you become transparent like glass. You have nothing left to hide. Private matters. And you might say, well, I have nothing to hide anyway. Yes, that's all well and good, but sometimes it's not up to you to decide that. You don't always decide whether you should hide something or not, because politics might change one day, and suddenly something that was always acceptable is no longer so. So you should approach this with a bit of caution and consider it carefully. So step by step, digitalization is bringing this about. A more detailed picture of everything is emerging. About our behavior, our habits, our decisions, as I already mentioned earlier with AI. And the question is, what is driving this? Why is this even happening like this? Well, a central principle and reason for this development is, of course, efficiency. It will be the case that digital systems simply can make processes significantly faster and cheaper. So things that used to take days or weeks can now often be done in seconds. Whether it's money transfers, contracts, or administrative processes, these can all be digitally automated. For me, there's a bit of sadness because I can still remember times when people still wrote letters and you waited for a reply and everything was a bit more relaxed. The reply didn't just take a few seconds. It could easily take a week. So you can imagine some things really were more relaxed in the past. And now we're becoming more and more automated and processes are getting faster and more efficient. Of course, companies save time, staff, and costs as a result. That was one point. Another important point is, of course, what's called scalability. So scalability means the ability to grow and the potential for increased performance, if you want to put it that way. The potential for increased performance, if you want to put it that way. Digital systems can be expanded very easily. A software or a platform can theoretically reach millions or even billions of people at the same time. And that is actually a reality. Just think of your messenger services or other various media that we all know. And that's exactly why the big technology companies are investing so massively in these digital platforms, and as a result are driving digitalization forward in every area of life. And once someone has built a functioning digital system, they can use it relatively easily anywhere in the world. Then there's another advantage, a huge advantage, and that is the enormous amount of data that is generated in the digital world. As I mentioned to you earlier, when I talked about feeding AI, I already explained that it actually needs this data. It is fed with the data. Why? Because then it can simply make better decisions, predictions, and so on. It can make them, and companies themselves can, of course, better understand and analyze what people are interested in. So what actually interests people as consumers, how they behave, and above all, what they buy. And with these huge amounts of data, you can really make very precise predictions and foresee developments. Of course, this doesn't stop at politics. It extends into politics as well. Of course, quite naturally, this can also be exploited or misused and applied in almost every imaginable way possible. As a result, many challenges arise for all of us. This is the danger of increasing and possibly even total surveillance. And Marc has already warned extensively earlier about these negative consequences, for example, of a digital euro. Many of you might be familiar with the book 1984 by George Orwell. And in this book, yes, it describes an absolutely terrifying surveillance state. And if you don't know it, get it. You really should have read it. So as a wake-up call, a so-called wake-up call in English, and it's precisely through digitalization that we could end up in such a dreadful, oppressive state. And we're really not that far from it if we're not careful and don't eventually set boundaries for the whole system. Because there is simply more and more data about our behavior. Privacy has basically already become a thing of the past. And of course, there are also those in our society who get left behind. Not everyone has the same access to technology, and not just physical access, but also mental access. This creates a new form of social inequality, and I count myself as the first among those people who, in part, don't really keep up with these systems. Maybe also because I still belong to an older generation, and sometimes I myself am overwhelmed by all this digitalization. We'll get to another topic later, which has also really overwhelmed me, this digital IT. But another important problem that shouldn't be overlooked is security, cybersecurity, because the more our areas are organized digitally, the more opportunities there are for criminals to somehow rob us or cause us harm. And of course, you could also say, since many people consider environmental protection and so on to be very, very important, and rightly so, of course, that's the issue of resource consumption, because data centers, server farms, and cloud infrastructures, sometimes they actually build small nuclear power plants next to them just to secure the energy supply. So you shouldn't underestimate that. So all in all, it must be said that digitalization has brought us many advantages and will continue to move us forward. But we shouldn't look at it completely naively, always with a grain of caution, a grain of salt, as they say in English. And maybe we should talk a bit more about what a sensible balance could be. How much digitalization actually makes sense? Does everything really need to be digitized? Maybe we should also preserve alternatives. Maybe there should even be a right to analog. I actually don't think that's such a bad idea. In some areas, that might be a shame, though. But let's see where things go from here. Again, it's a bit sad. When the older generations gradually die out, probably no one will remember how everything used to work in analog and how much privacy people really had back then. So it really is a shame. But let's continue with the program.
Yes, Christian, thanks for guiding us through how all these digital systems, especially in so many different areas of life, are changing our everyday lives. And with that, we come to the downside of all this digitalization. You've already touched on it, dear Christian, cybercrime. There's far too little talk about it, probably also because far too few people are familiar with it or deal with it. But what actually happens if all these digital systems fail? Nicola, you deal intensively with cyber risks and financial risks. How dangerous can it really get?
Yes, that's exactly right. So I spend a great deal of my time on the side actively managing and dealing with various cyber risks. and I actually engage in detailed daily conversations with large international companies. And the truly fascinating and significant development here is the specific nature of what is actually new that's being added to the landscape. And in this particular case, in most companies, especially at the international level or in large corporations, cybersecurity has been added as a new department because it will simply be such an important area in the future. And I really enjoy talking to these people in particular, and I ask them, what actually happens there? Or what kinds of risks are there? What examples can you tell me about? You can? And there were actually some pretty interesting examples. Exactly. But the most important thing about cyber risks, as far as they affect us, is that we live in a time when the financial markets basically operate around the clock. Transactions are processed in milliseconds and payments flow around the globe in real time. By now, we all have instant transfers as well. Portfolios are managed digitally, and of course, that's convenient and efficient. But like all good things, this also has a downside, because the more digital our financial system becomes, the more dependent it is on functioning infrastructure. And this infrastructure, as Christian mentioned, consists of servers, software, networks, but also of human decisions. And all of that can be attacked, and all of that can also fail quickly. And there are certainly many documented examples of this, which I have also personally read about in the past.
In 2016, attackers gained access to the SWIFT system of the Central Bank of Bangladesh and transferred $81 million to themselves before the attack was even noticed. Another example, in 2023, several large American financial institutions were the target of coordinated attacks that, of course, aim to disrupt access to trading systems. I am also in contact with many financial institutions, and that's exactly where it stands out. Because at precisely such financial institutions, on these platforms, a lot of people trade every day. Many trade, how should I put this? Many trade, let's say, in a regular way. Others trade to gain an advantage for themselves and, of course, always look for these loopholes. That might still remain there. And these very financial institutions, or rather the cybersecurity departments, say that they really deal with such attempts on a daily basis, where potential attackers find some kind of loopholes. Of course, they've been able to fend all of this off so far, but here you can see how important new departments like cybersecurity have become nowadays. And the perpetrators here are usually quite different. Most of the time, you see IP addresses or other indicators showing where it's coming from. Of course, they could be organized criminal groups, politically motivated hackers, or even possibly state-sponsored actors. That can certainly happen as well. But what they all have in common is that all these facts, or rather these very players, use these circumstances to improve our financial system, to exploit something somewhere, or rather to take advantage of this interconnected financial system. And the risk doesn't just lie in the direct attack, but also in the chain reaction that such an attack can trigger. And if, for example, a central trading house, which I explained earlier, meaning a broker where such paper gold contracts are traded, fails, then transactions can suddenly no longer be completed. Liquidity dries up, and of course, trust is lost. And it's very difficult to regain that, because once it's gone for good. And regulators worldwide, including the EU, which has now introduced the so-called Digital Operational Resilience Act, which on the 17th came into force in January. That was already last year, 2025. They have created a legal framework in which financial institutions are required to ensure increased cybersecurity and are also obligated to have a so-called cybersecurity department with a central contact person, someone responsible where the whole issue is discussed and addressed, so to speak. And whether this law closes all the gaps remains questionable. Not every law closes gaps. One law is always followed by more and more laws. But overall, it remains questionable whether any law can actually close such gaps. And what does that mean for you? In the short term, there is, of course, the risk, the operational risk of simply not being able to act during an attack. For example, if you are active on such digital platforms or trading paper contracts. You can neither buy nor sell. You cannot hedge or open positions. And if this site no longer works, everything is usually lost. In the long term, the question arises, how much of your own assets should actually be completely dependent on such systems? Digitalization naturally brings enormous advantages, especially AI, which definitely takes a lot of work off our hands in daily business operations. But those who understand their dependencies and structure can, of course, additionally diversify more securely, and here, especially with physical gold and silver, you don't have to rely on a cybersecurity department for that. You don't have to trust such a department. You can do your own thing, buy gold and silver and store them. And then you always have it physically and always have access to this physical commodity, which is your property.
Thank you, Nicola, for your assessment. I think that's very important and also opens many people's eyes, or at least raises awareness for this important topic. And right at this point, we want to bring Mr. Friedrich back in because the major trends we've just discussed, they fit seamlessly into his overall image. Marc, the stage is yours for your second blog.
I think we all feel it. The world has fallen out of joint. We are living in a completely new era and uncertainty is spreading everywhere. What happens next? Geopolitically, economically? What will happen to my job? And how will politicians proceed regarding taxation or energy policy? Never before in our lifetime has uncertainty been as great as it is now. And that's where we want to shed a little light on the darkness. Where are we headed, and how can I, of course, protect my purchasing power and my assets from an overreaching state, from inflation, crashes, or expropriation? Before we get into the details, here is the legal notice and disclaimer. All of this serves as information for you. You have to make your own decisions. You are responsible for yourself, and I always urge you to do your own research. I've brought an exciting journey for you with a total of 4 stops that we want to explore together. First, of course, what is asset protection? How should you position yourself? Then, why is Bitcoin digital gold and what is real gold? And then, of course, the euro crash and the monetary system, why we are currently witnessing the emergence of a new financial system, and perhaps a suggestion for a practical strategy, how to allocate, how to position yourself in uncertain times like these, and what the safe havens are. And if you would like to experience me live, you are welcome to book me for a lecture, whether it's a corporate event, anniversary, birthday, company founding anniversary, weed pulling birthday, circumcision, or even communion. Everything has always gone very successfully. Feel free to check out my website, marcfriedrich.de. I also have something exciting for you, namely, for those who now want to actively buy commodity stocks during the commodity supercycle. There is even my own broker solution, namely the FS broker. It is, in my opinion, the best broker in the world when it comes to commodities. You have access to 160 different exchanges worldwide. Overall, very favorable conditions and even real human service. Yes, no joke. When you call, it's not AI, not a chatbot, but real people made of flesh and blood. And that is, of course, an incredible added value. In addition, we are the only ones to offer an integrated tax solution that you can add on. And every entrepreneur knows this. It's difficult to open a securities account as a company, but with us, it's a breeze. So feel free to check out fsbroker.com, finally take action and protect your money. We live in a digitalized world. AI is taking over more and more jobs, taking on more and more tasks. We all see it in our everyday lives, and of course, it won't stop there. In the future, it will affect finances, politics, but also your own life. That's why you need to take action now and position yourself correctly. And we can also see it in books, for example, in David Rogers' Web. Great taking that even stock markets might not be quite as safe anymore. So as a former hedge fund manager, he says that we are going to see a major expropriation, that the global financial systems have been constructed in such a way, legally speaking, that in the event of a crisis, private assets can simply be transferred to systemically important institutions. We also saw this during the financial crisis, the euro crisis from 2008 to 2013, that precautions were taken back then. I'm just mentioning deposit insurance, I'm just mentioning asset Insurance Supervision Act, paragraph 314, and so on. I've described all of this in my books. Feel free to look it up, that you can be expropriated at the push of a button at any time because institutions are considered systemically relevant. That's why Webb also says, of course, that stocks no longer really belong to you directly, but are only a claim on the bonds, or rather stocks And in the securities account, the bank is listed as the owner, not the investor themselves. And that's a very important point that you have to keep in mind. In practice, this means that securities are then held at central banks or at the clearinghouse, not with you anymore, in your own securities account. And EU bail-in regulations allow the use of account balances for the bank. It's also important to actually own physical assets yourself within your own sphere of influence. And that's why I founded the security strategy in Liechtenstein, so that you can physically own the shares yourself and not have them lying at the clearinghouse, or so that you can become the owner yourself. Feel free to check my website if you want more information at friedrich.report. And the fact is, we can see that governments are taking on more and more debt, making more and more wrong decisions, and that in the end, we have to pay the bill, either through more debt, for which we are liable, because the state's debts are our debts, since we are the state, or through new taxes and levies. So every politician, every socialist, whether it's Fratscher, Lauterbach, Klingbeil, or any of the others, they all have only one solution. Always. More spending. Saving? Never. Taxes? Absolutely. Absolutely. That's why it's always taxes, taxes, taxes. That's the only solution socialists ever have. And at the same time, the debt spiral keeps going up and up. Debt mountains are rising everywhere, no matter which country. Here, for example, is, of course, the most important economy in the world, the USA. Just a few days ago, we broke through the $39 trillion mark, and it's unbelievable. And now, in the last 16 years, we've quadrupled the debt. In the USA, as you can see here, so under Obama in 2010, we had 10 trillion, and now we're almost at 40 trillion. Here too, we see exponential growth, not just in the field of artificial intelligence. I'm a big advocate of gold, but also of its young new sibling, Bitcoin, as everyone knows. I've even written an entire book about it, which I'll show here in a moment. And for me, it's more of a complement than a competitor, because many people say, I'm only into gold, or I'm only a Bitcoiner, and so on. For me, both are forces that represent sound money. That is, they aim to implement a solid monetary system. And as such, opponents of the current debt-based monetary system are actually always on the right side, and they are brothers in spirit. As I said, here's my book on the subject that I wrote, 600 pages of pure concentrated knowledge about the monetary system, blockchain, Bitcoin, and gold. It's also an important topic, as is financial history. I can only recommend it to everyone. It has been on the bestseller lists for over 2 years now. We're now in the 5th edition, and of course, it's also available as an audiobook. Feel free to browse through it or listen to it. So I'm sure it will definitely provide you with great value. And the reviews speak for themselves, really. And it also took 2.5 years of my life to create. And as I said, it's of great value for anyone who wants to understand the monetary system. And I'd also like to remind you of Henry Ford, who said, if people understood our monetary system, there would be a revolution before tomorrow morning. With this book, it's guaranteed that you'll understand it. Yes, and for me, as I mentioned earlier, Bitcoin and gold are actually brothers in spirit, because both want a stable, healthy monetary system and actually want to take monetary sovereignty out of the hands of politicians. And we can see that, practically speaking, paper currencies are hitting new lows against gold, but also against Bitcoin, meaning they are losing more and more purchasing power. Yes, here against the euro, for example, since its introduction in 2000, we see that the gold price has shot up massively, but the euro has lost over 90% of its purchasing power, and against Bitcoin, even over 99%. Loss of purchasing power. And we see this in all paper currencies. And at the moment, for example, Bitcoin is historically cheap compared to gold, but both belong in a portfolio. So I would definitely want to own both right now in an anti-cyclical way, and then rather increase my Bitcoin holdings. And of course, if gold continues to trend downward, then I would become active there again or enter anew. Gold, of course, has a history going back thousands of years, money for 5,000 years. Every central bank in the world has gold as a reserve currency in its portfolio, even though since 1971, we no longer have gold in the monetary system anymore. That alone should give one pause for thought. It shows that central banks apparently don't trust their own product, unbacked paper money, and would rather buy and hoard gold, of course. Gold is physically tangible, independent of banks, has no counterparty risk, just like Bitcoin, and is a hedge against inflation. That means gold doesn't rise in price, because an ounce of gold is always an ounce of gold. But if its price has doubled and not 2 ounces of gold are still just 1 ounce of gold, you simply have to put more scraps of paper on the table. And with digital gold, Bitcoin, the story is just a bit shorter. It has only existed since 2008, or rather 2009. It is limited to 21 million units. With gold, we know that every year 2 to 3% more is added. New gold ends up on the ocean floor. We don't know how much gold is still lying dormant in the Earth's crust, on the ocean floor, or on other planets. Bitcoin is decentralized, independent of central banks, independent of politics or political parties, extremely fragmented or divisible, and can be taken anywhere. It is borderless, cannot be manipulated, cannot be changed because the code is simply fixed. It's important to know that an all-time high in gold, silver, or even in Bitcoin simply means, conversely, an all-time high in all paper currencies or in the euro. So as I mentioned earlier, it's not that the gold price is rising, but rather that the euro price keeps falling. Purchasing power is disappearing. Voltaire, the French philosopher, recognized this correctly over 200 years ago. Paper money always returns to its intrinsic value, namely zero. And in my book, I have analyzed 3,000 years of monetary history and demonstrate that paper money systems or monetary systems always fail. Only backed monetary systems are spared from collapse for a certain period of time. And the volatility keeps showing it again and again. Gold is the king in the house. Whether during the hyperinflation of the Weimar Republic or the state bankruptcy of Austria or Argentina, you have to own gold or limited assets. We can see that even central banks are hoarding more and more gold. Donald Trump, the US president, even said, "Whoever has the gold makes the rules." And that's exactly how it is. And I have repeatedly hinted in my books, but also in videos, that economic history shows us that monetary systems always start out stable and solid as gold-backed systems. And then, regardless of the regime, whether monarchy or empire, imperial rule or democratically legitimized governments, they are always undermined. Whether through historical misjudgments, socialism, expensive election promises that have to be paid for, or financing on credit, or even wars that are instigated through incompetence, through inbreeding, or whatever else it may be. And then the monetary systems, which were solid because of gold, are undermined and loosened. Socialized, I would say, by socialism. And then the decline actually begins. And monetary systems always die in inflation, never in deflation. And then the monetary system dies, and at the same time, a new monetary system is already emerging, which is once again, of course, solid and based on gold. And we are currently in exactly this turning point in history. Our current monetary system is dying. It was unraveled in 1971 when Richard Nixon ended the gold window. And we are also witnessing the emergence of a new monetary system, namely, once again, a solid monetary system. We see that central banks are hoarding gold. We see that they are buying more gold than ever before. We see that the USA has the gold reserves, the Bitcoin reserves, and a new monetary system is emerging. 2008, the emergence of Bitcoin. I also believe that now, more than ever, you need to own limited assets as the next inflation wave is coming. And that wave will once again push up the value of limited assets due to the amount of money being pumped into the system. You need to own gold. Anyone who doesn't yet have physical gold should take action. In my opinion, any price below $4,500 is a buying opportunity. From a technical chart perspective, we also see a strong support zone between $4,200 and $4,000. Anything below $4,000 would be even more significant, buying opportunities. But in any case, anyone who hasn't entered yet should make their first purchase below $4,500. And then a second one if the price drops even further. And of course, a third one below $4,000 if it even drops that low. We see the same with silver. Any price below $60 is a buying opportunity. Even below $70, you should make your first purchase. In this regard, you should become active and always enter step by step in tranches. And in the long term, I see new all-time highs for gold, new all-time highs, the same goes for silver. Bitcoin is currently in a bear market, and here, any price below $80,000 is, in the long term, a buying opportunity. At the moment, we're at around $70,000, and I can easily imagine that with a stock market crash this year, Bitcoin could drop even further. I would say that, in my opinion, any price below $60,000 is a buying opportunity. That's where you can start setting your first tranches. If you don't have anything yet, you can already set your first tranche now, so to speak, get your foot in the door. But in the long term, I see new all-time highs well into the six-figure range. Here's my assessment of how I want to position myself at the moment. With precious metals, we're currently seeing a breather, which was urgently needed. It's sustainable and healthy. As I said, if you don't have any yet, you should definitely take advantage of this opportunity. If you want to increase your holdings, you can also get active here. I would allocate up to 30% of the portfolio to precious metals. The same goes for Bitcoin, of course, if you have an affinity for a high-risk investment. Stocks also up to 30%. Here, I would definitely overweight energy and commodities and underweight MSCI, real estate, or also AI, tech, and so on. I would rather underweight. I'm a huge fan of Brazil. I'm a fan of emerging markets. I'm a fan of fertilizers, coal, uranium, gas, oil, gold, silver mines, and so on. And of course, cash, I would, so to speak, hold up to 10% also to be able to act counter-cyclically if the markets head south again, or if there are new buying opportunities in Bitcoin or also in precious metals and so on. Of course, if you are expecting a crash, you can also increase your cash position up to 30% or more if you want, but then you should also try to get back into the markets afterwards. As I said, I expect a correction in the stock market this year, and then the central banks will have to, well, the central banks will actually have to take action. Because if inflation rises, a second wave of inflation will come, then the central banks, despite their current restrictive stance of not lowering interest rates, will end up lowering rates again. If they lower the interest rates, then of course there will be a flood of money entering the market. Then we will once again see all limited assets tending upwards. That means gold will rise, Bitcoin will rise, commodities will rise. So you should definitely be part of it at this party. This is the commodity supercycle I keep talking about. And then, as I said, things are going to get really wild. Exactly for this commodity supercycle, my team and I spent years creating the only investment newsletter on the commodity supercycle in all of Europe, namely the Friedrich Report. Here we have the MSCI, but we've also already outperformed the S&P 500. In 2 years, we've achieved over 100% performance with our mining stocks and our commodities. Feel free to take a look. There you'll also find signals for when to enter and, most importantly, when to exit again. And all of this for less than €1 a day. Definitely give it a try. In my opinion, it's of great value. It is the best, most clearly structured, most understandable, and of course, the most transparent newsletter, investment letter in this field, whether it's about gold, silver, Bitcoin, or of course, mining stocks. Feel free to check it out. And the response, of course, speaks for itself, in my opinion. The reviews everywhere are phenomenal. Feel free to take a look on Trustpilot, and of course, you can cancel at any time. With that in mind, I hope this information has been of great value to you. I can only urge you, take action. The window of opportunity isn't getting any bigger. You have to protect yourself from an overreaching state, from the authoritarian system of the EU, and of course, from the volatility of the market. As I said, we will see a second wave of infections. We will see prices that we can't even imagine right now in gold, in oil, in Bitcoin, but of course also in commodities in general. And you have to be part of it because this will generate life-changing profits so that you can live a relaxed life, so that you can go to the gas station or go shopping with a grin on your face, even when others might not be able to anymore. It's simply about being 1 or 2 steps ahead of the rest, becoming self-sufficient. From the shackles of the declining monetary system in which we currently find ourselves. I hope this was an important piece of information for you with great added value. Of course, I look forward to seeing you either at a live event at the next webinar here at GVS or somewhere else in the world. All the best. Stay brave, stay healthy. Warm regards, your Marc.
Thank you, Marc, for the explanations and for the great information you gave us. Thank you for your visit. Now we're going to treat ourselves. Now that we have been running this for a little bit over an hour, we are going to take a quick moment for a short breather and sit back to watch a brief product demonstration video together from GVS. Let's get started.
Argo Herios is a traditional precious metals company based in Mendrisio, Switzerland. Founded in 1951, today it is part of Herios Precious Metals and is one of the world's leading players in the precious metals industry. With the highest precision and state-of-the-art technology, the name Argo Herios stands for quality and trust. Responsibility is at the core of their actions. Respectful treatment of people, the environment, and all stakeholders is firmly anchored in the company culture and is considered a crucial factor for future success.
Argo Herios gold bars can be purchased at any time. In our web shop, we'll continue and, of course, stay on our main topic. Today, digital money, digital euro. This is currently causing a lot of uncertainty for many people. And yes, what does it really mean for our freedom or for our financial independence? Christian, give us a clear assessment on this.
Yes, thank you very much. Of course, we don't want to unsettle you. That's difficult with a topic like this where, well, what can I say? Something not so pleasant is coming our way. Whether this is uncertainty or perhaps more of a wake-up call. Maybe there are still one or two choices we have left where we can rein this in and tame it a bit. Let's see. The development of technology probably can't be stopped anyway. Let it happen. And thank you again, Marc, for your fascinating overview. You've already told us about the dangers of this digital euro. Yes, the solutions. Let's see. Because the European Central Bank, the ECB, as you surely know, has been working on this development for several years now. And in past webinars, we've repeatedly reported on this, the development, the programmability. Back then, I also showed you, you can take a look at it, the programming instructions, what's all possible there. And what is possible will also become reality. So now you, dear viewers, might simply be thinking, well, what is the digital euro? It's just a modern form of our current money, right? Just digital. Maybe faster payments like with your phone or a more convenient app. But no, this is about much more, namely a fundamental change in the structure of the monetary system. So let me explain this a bit. Today, money basically exists in two forms. There is cash still, and there is book money in bank accounts. We can directly possess and use cash without any digital system in between. And this commercial bank money, on the other hand, is processed and managed through traditional banks and various electronic payment infrastructures. The introduction of the digital euro would establish a distinct third category of currency, which is specifically known as digital central bank money or central bank digital currencies. Central bank digital currency, if I'm saying it correctly. So this is something that is issued directly by, in this case, the European Central Bank. The banks, they have nothing to do with it anymore. Of course, that already sounds very practical because payments could become faster and more efficient. That's actually good, yes. But at the same time, money would thereby become completely part of a central digital system. Today, we've already heard about digitalization, the reasons for it, what AI is doing with it, and how it could continue to develop. And this digital euro money is part of a central digital system. And while with cash you have anonymity, it works anonymously, your money, the goods, all set. And all of that is independent of technology, of infrastructure. A digital euro is always tied to a digital platform. That means every payment would go through this system. And technically, it is, of course, possible, and not just possible, it will probably actually be done, to track money flows very precisely and to control the system more tightly. Just as Marc, for example, mentioned, if there is an energy, a lockdown perhaps, where you are then only allowed to refuel at the gas station using digital euros. And as an example, as Marc also said, maybe 30 euros per day or per month or per whatever. And I already see a very great danger there, a growing dependency if money is fully digitized and organized. In this way, access to your own assets depends always on these functioning systems, on these institutions. Cash still offers a certain degree of independence today. That disappears with the complete digital currency. And at that point, the connection to the precious metals market naturally becomes very interesting as well. We mention it often anyway, but gold and silver work completely differently from digital currencies. Precious metals are independent of any bank or central bank, and they are not just a data entry in some computer. If you will, there is still real freedom in gold and silver. But of course, we won't be able to stop this technological development anymore. Now it's more important that it isn't abused. There are many technologies that can be dangerous, but if they are managed properly, they could also benefit everyone. And the risk is minimized. Maybe nuclear power is something like that, maybe not. But as I said, it also depends on how you prepare for it, not someday, but already now. Because these things are coming as surely as at some point, summer will come. And with that, back to you, Stefan.
So thank you, Christian. And when we talk about currencies and power structures, there's no way around the dollar. but its dominance is crumbling. We've already gone through this several times in the last webinars. Nicola, you've been following these developments very closely for years, as you've demonstrated in the last webinars. What is really happening right now in the global financial system?
Yes, so I've actually been following it for years, and I actually deal with it on a daily basis. And even today, we can't get around the topic of the dollar. You've already mentioned it, Stefan. The US dollar has been the undisputed world reserve currency for decades. And in this respect, however, it must be said that it is gradually losing influence. And let's take another quick look at that. Why that is actually the case and what it ultimately means for us as investors. And for that, we first need to understand where this dollar dominance originally came from, or where it came from historically. So the origin of dollar dominance lies in the Bretton Woods Agreement of 1944, when the Western nations pegged their currencies to the dollar. When this system collapsed in 1971, this dominance was maintained through the petrodollar system. Oil was traded worldwide in dollars, which ensured that practically every country in the world needed and also held dollars as a reserve currency. And through SWIFT, the US still controls a large part of international payments to this day. Sanctions only work because this dependency is so deeply entrenched. And this is exactly the point where more and more countries are currently taking action, but also expressing doubts. Because China buys around 90% of Iranian oil outside of the dollar through its own payment system, CPS, which is processed in Wuhan. Russia has reduced its dollar reserves to a historic low. Even further, I've already shown in previous webinars with graphics where this has gone, or rather where it will go in the future. Saudi Arabia is discussing settling oil deliveries to China in Wuhan all of a sudden. And India pays for Russian oil in rupees. So you can see the interconnections here. I could name even more countries. Brazil, the United Arab Emirates, Malaysia, Azerbaijan, all of them are actively building alternatives. Above all, emerging markets, or the so-called tiger economies, which actually aren't that well known, but they too are now actively considering reducing their dollar reserves and building up alternatives. And Iran is using cryptocurrencies, for example, to bypass SWIFT. That's also a very interesting strategy. That means the IBF data confirms exactly this trend. The dollar's share of global foreign exchange reserves has dropped from 71% in 2000 to just 56.9% today. And at the same time, Trinker has already mentioned an interesting acronym, CBDCs, central bank digital currencies. And many countries are currently working on exactly this acronym. These are digital central bank currencies. China, for example, is already using the digital yuan. Russia is testing the digital ruble. And within the BRICS, a joint digital payment system is being discussed. And the goal is actually clear: to establish a network that is completely independent of the dollar, or at least removed from the dollar. And overall, I have now also looked at statistics and done a bit of research with AI. In fact, the AI did the research for me and found that over 130 countries are currently working on such digital central bank currencies. And the trend is even increasing. Countries like Jamaica and Nigeria, for example, have already introduced CBDCs and are actually already using them for payments within the country. In other words, the citizens are already actively using it. And here there is one very important point that I keep bringing up in conversations. However, the yuan, the ruble, or a possible BRICS currency do not solve the fundamental problem. They merely replace one state-controlled currency with another. For example, the yuan is also subject to political decisions made in Beijing. A BRICS currency would also be dependent on the interests of its member states. Countries that are economically, politically, and culturally very different from each other, of course, that also needs to be taken into account. This means that anyone who replaces dollar dependency with yuan dependency today has not actually solved the fundamental problem. And CBDCs actually reinforce this even further. They give states a level of control over money that has never existed in this form before. And every transaction is traceable. Expenditures can be controlled. And above all, every transaction among the population is visible or also controllable. That needs to be emphasized again. And that is precisely why the behavior of central banks is so revealing. They are buying gold in record amounts and thus building up a reserve that stands outside all of these currencies. And that is the crucial clue for us as investors. That means exactly these countries which control and, so to speak, develop the currencies are buying other securities in record amounts. Physical assets, gold and silver. One could almost speculate that these very players no longer trust their own product. And the question isn't which currency will replace the dollar. The question is what will remain stable, regardless of which currency is currently on top and which currency is actually the world's reserve currency. And the answer to that is actually given to us by the central banks of the world every single day. Physical gold and silver. It's that simple.
Absolutely. Very interesting, Nicola. And we're seeing these developments not only on a global level, but also right on our own doorstep, because identity, data, and search systems are being digitized everywhere. Christian, you mentioned this earlier. ID Austria is a very good example, in my opinion. Please explain to us why this topic is much bigger than we all think.
Yes, I'd be happy to do that. I have to laugh because this topic has actually been floating around for quite a while. But dear Germans, I'm not exactly sure what it's called for you, but you have something similar. So please don't laugh at us now. So I've already talked about the ongoing digitalization of all processes. And the important part for us in Austria, for our 9 or 10 million people, is this IT Austria. And perhaps you, dear Austrian viewers, may have even already set this up, or you may have transferred it from what was then called, I think, the handy ID. Back then, during the time when we were all walking around wearing masks, this was conveniently introduced. For all those things you might still remember, you had to have it so that it could be rolled out widely. So much for the background. About things that just happen, you have to think everything through a bit. But maybe you've already set it up anyway. Or maybe you're one of those who still have this mobile signature like I do, but in my case, I think it's already expired. Or I don't remember the password anymore. But anyway, maybe you also received a message telling you to finally switch over from the old mobile signature. But all of that is secondary. The important question is what's really behind it? And why is such a system becoming more and more important? Who is the driving force behind it? Well, what do you honestly think about that? Of course, you should know that this was actually decided a very long time ago at the European Union level, specifically through the implementation of the eIDAS regulation. With the passage of that law, all European citizens were essentially granted a new digital identity by strict regulation, effectively forced upon them whether they wanted it or not. And the ID, Austria. For you, dear Austrians, it is basically your digital identity. With it, you can identify yourself online to authorities, sign documents digitally, and access government services. And what used to be perhaps the tedious trip to a government office is now increasingly happening via smartphone, computer, and similar devices. And of course, as we already talked about earlier, when it comes to digitalization, it certainly brings a lot of progress. You save time, you can take care of many things from home, and the entire administration simply becomes more efficient. We also mentioned that it's one of the reasons for digitalization, efficiency. But if you take a closer look at the development, you can definitely see some problem areas, so to speak. Because by now, more and more areas of our lives, as I already mentioned, are being organized digitally. And now administration, communication, banking, contracts, all of that is supposed to migrate into a digital system. But in planning, it always looks better than in actual implementation. At least here in Austria, these systems don't always work completely smoothly. There's a report from the Kronen Zeitung about this. For example, just as one example, among many, there is an entrepreneur who has had extreme problems with his digital ID because he needed court documents, but he couldn't get them because the app kept showing error messages. And these so-called error messages, you can look this up on the internet. This is a problem that hundreds of thousands have with this ID Austria. It's not an isolated case. In Styria, amusingly, just recently, every 5th ID Austria had to be revoked because many people couldn't log into the app. But the reason they couldn't log in was because the app had a programming error somewhere. And that's actually crazy in itself. But that really shows the problem, because we see that if this isn't done properly, we'll become completely dependent on these systems. We are at the mercy of these systems. That is, if they don't do it properly, and whoever has access can participate. Anyone who doesn't have access or has technical problems apparently just has bad luck. And maybe at some point, access will simply be denied to someone who is considered undesirable. That's actually the next issue. But as I said, this isn't just a topic for us in Austria. Basically, this affects all countries in Europe. And probably these things are being worked on worldwide as well, because it's always somewhat coordinated in some way. Digital identities, digital IDs, administration, signatures. So basically, it's a huge relief, a big acceleration, efficiency. You don't have to print anything out anymore. You can do it digitally. It all sounds super exciting, but when you look at it in connection with other developments, it already looks a bit more dangerous. For example, when you look at the digital euro, which we've already talked about, and these developments show that a kind of digital ecosystem is forming, if you want to put it that way, in which your identity, your data, and your money are becoming increasingly interconnected. And whether that's good or bad, you now have to ask yourself the question, how independent am I, and is my wealth actually still from these systems? And how secure are these systems really? Well, if these systems are absolutely secure, really completely secure, then great. But the reality is many people will fall through the cracks. Older people, for example, or those who deliberately refuse to participate in these systems. Will there still be an analog option for them at some point in the future? To go to the registration office, to get a driver's license, or even just to buy food? So these are really very big questions. Please, everyone, think carefully about this and act accordingly. And now back to you, Stefan. Thank you.
Yes, thank you, Christian, for the explanation. Those were a few examples just now. Austria was mentioned, but it's also the case that there are completely different, extremely fascinating examples of just how far developments have already come in this area. Nicola, you've brought us a place that sounds like science fiction, but actually exists. What really happens there?
Exactly. Actually, Christian is our expert for so-called paradises. But I'm going to jump in ahead of him because I was recently at a nice dinner with a colleague, and all of a sudden he mentioned a place. And then I listened very closely to what was actually behind it. And that's exactly why I brought it along to our webinar today, because it fits the topic perfectly. It's about a small Caribbean island in Honduras. Because when I look at it, I really ask myself, who actually controls our money? Who controls the rules? And how do I actually protect my wealth in a world where both are currently changing? But let's take it slow for now. What is this really about? The place I'm talking about is called Prospera. It's a special development zone on the island of Roatan, operated by a US-based private company. This was made possible by the so-called ZA law, which was passed in 2013 under President Juan Orlando Hernández. This law allows for the establishment of privately managed special economic zones with extensive autonomy from the Honduran state, their own legal system, and their own administration. The idea behind it is truly crazy. A company takes on the role of the state. You really have to let that sink in for a moment. For example, the corporate income tax here is just 1%. Honduran law does not apply, and police and judiciary are privatized. Extremely crazy when I first heard about it. And then I did a bit more research. And what I found really fascinating is that there are no unknowns behind this project. Peter Thiel, Mark Anderson, Sam Altman, so exactly the people who are also driving the digitalization of the global financial system. And I personally find that especially interesting because it shows that such developments are part of a larger movement. Prospera markets itself as one of the most Bitcoin-friendly legal jurisdictions in the world. Company registrations are done online within 24 hours, and even medical treatments without US approvals are tested there. That means everywhere it's not allowed, and that's actually in most countries. A special economic zone is simply developed, and then you can already start testing the first chip implants on humans. And this is not a classic tax haven like Dubai or Madeira or anything like that. It is an attempt to exert state pressure by replacing it with private digital alternatives or almost even bypassing it. Because exactly in these special economic zones, billions are being pumped in and research is being conducted, all somewhere far from the public eye. And you also don't hear anything about these zones. It's not that easy to bypass the state after all. So here too, the state quickly became aware of everything that was going on there. And Honduras, of course, tried to fight back against it. And of course, as you can clearly see in the picture here, there were numerous protests from citizens, from the general population. Why are all these American companies suddenly investing billions here? They can do whatever they want. And in 2022, the president reversed the CED law, but that only led to a lawsuit for several $billion. That means it's simply a lawsuit that just gets paid. And then things just continue as before. Furthermore, this massive lawsuit for several $billion is actually, if you compare the figures, a very significant and substantial portion of the entire annual budget of Honduras. Consequently, the lawsuit was simply accepted as a form of donation. And as a result, the Prospera project continues to exist and operate today. And when I discussed this with my colleagues from the industry or with other people, the reaction was always similar: fascination and unease at the same time. Fascination because it promises real freedoms. Unease because you sense that when a company takes over state functions, you're no longer a citizen anywhere, but rather a contractual partner. And contracts can be changed quickly. That's also very important. And precisely in a world where rules are increasingly set by companies and money becomes ever more digital and controllable, you need assets that exist exactly outside of this system. Because it is exactly these kinds of systems that drive the progress of digitalization further. It is precisely because of such systems that this happens. Vast amounts of money are printed and debts are further inflated. And also because of such systems or places, as you can see here, the whole system will inflate itself in this way. But of course, all of this debt, all these advancements, etc., does have one big advantage. They also have a positive effect on the price of gold, of course. That also needs to be said. But Prospera shows where the journey can lead. And as I already mentioned, through these developments, through this massive debt, through this money printing, which is also being invested here in all these special development zones, this too is a system that may eventually reach its end. And that is exactly what then has a positive effect on the development of the gold price. And you can see that in new all-time highs. But I would be really, really interested to know what you actually think about this development, what you think about Prospera. And please feel free to use our chat tool to share your opinion, to let us know what you think about all of this. Of course, I would be very happy to see your opinion here as well. And with that, I'll hand it over to you, Nens Cepan.
All right, thank you, Nicola. We'll continue right away. But first, a short break for everyone who now has listened attentively and wants to really internalize everything. We'll watch another video.
If it's a silver one, has listened attentively and wants to really internalize everything, we'll watch another video. The design is iconic. A precisely minted kangaroo surrounded by radial sun rays. And if you look closely, you can spot another A inside the first A of kangaroo. This was finely engraved with a microlaser and can only be seen with a magnifying glass. A globally popular silver coin, now available at all Goldvorsorge and Silbervorsorge branches.
Yes, thank you to the control room, Silver Kangaroo from the Perth Mint. Perth Mint, Australia, the largest mint in the world, of course, always available from us. Before we continue, another survey that we're starting. Dear viewers, please participate again. The next question we have, let's take a look at the options. Exactly, here we go. Have you stored precious metals outside the EU? If yes, where? Yes, on the one hand, we have the GVS, the GVS is a storage network, but there are also other alternatives. Let's see in a few minutes what kind of result we get here. Yes, we've covered a lot now. The topic of digitalization. Maybe we should move on to a slightly different topic again. And right now, geopolitical tensions are on everyone's lips. Christian, we need to talk about the Strait of Hormuz. It's very dangerous, and it could easily lead to escalations there. Maybe you can explain to us a bit why it's so important.
Yes, that is definitely the case. It is very, very dangerous indeed. We are currently undertaking a long and challenging journey all the way from Prospera to the far side of the planet, specifically heading toward the Middle East. I assume most or many of you have already heard of this notorious, famous Strait of Hormuz. It's a strait of the sea. It is a remarkably narrow corridor. And at this very moment, it is nothing less than the vital and essential lifeline, if you want to put it that way, of the entire global energy supply for the whole world. And it's hard to believe that this actually, I don't know what politicians are sometimes thinking, that there's such a dependency on this corridor. Right now, things are chaotic in Asia for anyone who's looked into it a bit, because they get their energy delivered through this Strait of Hormuz. So, about 1/5 of the world's oil and 1/3 of global liquefied natural gas traffic, roughly speaking, pass exactly through this route. And Asia, as I said before, is supplied via this road. And since you all know that there are currently military confrontations happening there with Iran, the USA, and now other countries like Israel, this trade route has, of course, come under massive pressure. Because, of course, the first thing all the insurance companies said was, well, we're going to raise the insurance fees so that you can pass through there. And then nobody wanted to do that anymore. Put themselves through that. And apart from that, the risk for the shipping operators is simply too great. That's how it's being assessed. And
at least according to propaganda, I would say we don't really know exactly how much the Iranians are still able to do there. But through propaganda and individual actions, they have blocked this passage. Effectively blocked it. That's the current situation. Now, of course, the US Navy has considered stabilizing the situation with military operations, but that hasn't really worked out either so far. Apparently, although the stories change day by day, there have now already been talks between Iran and the USA to allow certain ships to pass through, namely all those not involved with the warring parties, so all those heading to mainly those going to China. But as you all know, in war, truth is the first casualty. And who knows if this story is even true, that talks have already taken place. So we're not seeing a classic war here, not a traditional military confrontation, but rather a blockade, an asymmetric one, if you will. Yes, how so? Of course, with threats, that's always the first thing. That's the biggest weapon. And then, of course, mines, drone swarms, and maybe small submarines, all of that is being threatened. These things make sure that ships don't want to pass through now. And here, this is where you come into play, because this is where the economic chain reaction begins. Somehow you always get the feeling that we've heard this before. A few years ago, there was another canal where a ship got stranded, and the entire world economy was, so to speak, maybe you remember, in the Suez Canal, but that's another topic. So when suddenly a large part of global energy trade is interrupted, yes, that has immediate consequences for the entire world economy. And how? Through rising energy prices. And that's like an additional tax on every product and every service worldwide. Production costs go up, transportation becomes more expensive, and supply chains once again come under extreme pressure. And inflation, which we've already talked about so much. And even today, again, inflation, which many central banks, at least that's what they say, have only just managed to contain or are in the process of containing. Rising prices, inflation, they could come back with full force. Didn't we just get through all of that? Well, at Goldversorge, we also see this. Currently, there is an extremely increased demand. An important reason for this is the special characteristic of physical gold. It does not have any counterparty risk. And moreover, more and more gold buyers are choosing high security storage because it is so flexible. And that's why in such globally uncertain times, when inflation keeps rising and when a small strait like the Strait of Hormuz could turn the entire world economy upside down again, or probably will, or possibly will. We will see in the coming weeks. In such a situation with uncertain times, being prepared is no longer a luxury for you. It's not like you're taking a luxury trip and picking up a bit of gold. Rather, it simply has to be an important part of your wealth protection because, believe me, inflation is coming. Almost certainly, and with full force. You will soon see it in all prices, especially food prices first. At the gas station, you can already see it, along with all the other consequences that come with it. So take precautions, and with that, back to the studio.
Thank you. The explanation about the Strait of Hormuz has also been heard very, very often in the media in recent days and weeks. That's why this segment is so important. Before we continue with the topic, let's take a look at the region, specifically the one we're seeing right now. Next to the Strait of Hormuz, you can also clearly see the United Arab Emirates. And that's exactly where the gold supplier, that is us, has a branch, more precisely in Dubai. Economically and politically, Dubai is practically right in the middle of this war. That's why we're looking forward to a brief situation report from Mr. Ulrich Hanten, branch manager of the Goldversorger in Dubai. He looks after our international large and storage clients there, and today he will answer a very, very important question that we've been receiving from our clients, especially often in recent days. Just how safe is Dubai really? That makes his impressions and assessments from first-hand experience all the more interesting. Go ahead, Ulrich.
Thank you very much, Stefan. Yes, as you have surely heard, Israel and the USA are currently engaged in military conflicts with Iran. Due to the geographical proximity and also because of the American military base, the UAE is also involved in this conflict. Involved? The good news first, the air defense system in the UAE works very reliably. There are virtually no direct hits or impacts. However, in isolated cases, rockets and drones are intercepted, but the falling debris
can cause damage, including injuries to people and damage to buildings. Unfortunately, this cannot be completely avoided. What we are currently observing is that the intensity of the attacks, including the quantity, is decreasing significantly. So compared to the first week of the war, only about a fifth of the number of drones and rockets are coming in now, as there were at the beginning. So there is a clear reduction, and this is also in line with the assessments of many experts who believe that the stockpiles will only last for a few more weeks. Although I was aware that the UAE is well prepared, I was still very impressed by this defensive capability. I can say for myself that I still feel safe in Dubai, and my colleagues and many clients on site share this assessment as well. In everyday life, we experience a situation like this. You go to work as usual once a day. A warning message comes to your mobile phone from the government. It then says that drones and rockets are currently being intercepted and that as a precaution, you should go into a secure building. After 15 to 45 minutes, an all clear is given, and then you can go back outside. The daily work routine at GVS is largely unaffected. 2 weeks ago, there was some damage to an Amazon server center. And as a result, one of our online banks wasn't working properly. But that wasn't a problem, because in payment transactions, we can always switch to other banks. So it didn't really have any significant impact on business operations. The biggest challenge at the moment is in air travel. There are repeated temporary airspace closures and frequent flight cancellations. And some international airlines are currently avoiding Dubai as well. At the same time, the rising oil prices are leading to higher transportation costs. This makes procuring goods a bit more complicated at the moment, but it's still quite manageable. At the same time, the situation here is also increasingly returning to normal. More and more flights are operating on schedule again. And both customers and colleagues have given me feedback that they were able to enter and leave the country without any problems. For us, operations at both the branch and the high-security warehouse are continuing without any restrictions. So all operations are possible. There are many customers who have, of course, contacted me about transfers from Dubai to other high-security warehouses. We are very happy to accommodate these requests. So even with increased planning, it was always possible. Especially during the first and second weeks of the war, there were a great many special return flights for stranded tourists. And we were even able to use these return flights to transport gold for storage customers, for example, to Zurich or Singapore. These are, of course, also the two most popular high-security warehouses among our customers. However, the attacks on the UAE are decreasing, and everyday life is also running smoothly. Therefore, I personally see no concrete reason to change the storage location. However, we continue to monitor the situation very closely and always provide appropriate recommendations. To conclude, a brief look at the economic situation. Of course, foreign direct investment in the UAE has now somewhat pulled back, meaning it has slowed down. Tourism revenues have also fallen away, and income from logistics has likewise declined. Thanks to the strong reserves of the central bank, however, this development is proceeding in a controlled manner. Overall, it is expected that the economy in the UAE will grow by around 4.8% again this year. Of course, that was a forecast made before the start of the conflict. And in a few weeks, we will see whether it might be revised downward. Some investors, as well as some of my clients, are even deliberately taking advantage of the current situation and are taking a closer look at the real estate market in Dubai. Naturally, prices are now easing a bit, and many bolder investors even see this as an opportunity to get in. To conclude, a brief internal update. On May 1st, a new colleague will start in Dubai. He is coming from Germany, is a native German speaker, and starting May 1st, he will also increasingly strengthen our team. The work visa is currently being processed here, and I spoke with him on the phone again last week. And he also told me that the current situation does not affect his plans. Yes, that's all from me for now. Thank you very much for your attention. I wish you a continued informative evening and hand back over to the stepper.
Yes, thank you, Ulrich, for the important status report and for everyone who has the Dubai warehouse. So everything is fine here for now, and of course we will let you know if anything changes. We will now wrap up together. Together, let's conclude the topic of the USA-Iran conflict with the final point. Nicola, how does the de-escalation specifically affect our, let's say, savings, gold, or the financial markets in general?
Yes, first of all, warm greetings to Ulrich in Dubai. So far, everything is going well here, thank God. And Christian has already reported a bit on the topic as well. Yes, unfortunately, another conflict. Somewhere it's also very terrible, one has to say. For weeks, many were talking about a possible escalation in the Middle East. Now it has actually happened. And as so often, it doesn't just affect governments or military strategies, but in the end, very concretely as well. Our lives, our money, our purchasing power, and our retirement savings. And or rather we, don't want to take a political stance here, but really keep things factual. And then, of course, for us, it's always about how does all of this affect things now? The financial situation for you and for investors, or rather the overall life situation. Because whenever geopolitical tensions increase, the financial markets react quickly as well. Capital then starts to move. Investors sell risky assets and quickly look for safety. And we are seeing exactly these patterns again now. And gold is holding its value steadily, while at the same time, for example, other markets are becoming noticeably more nervous. And within a very short time, several markets reacted simultaneously. Gold surged strongly at the beginning because large investors immediately started to shift their portfolios. That means they moved away from, for example, stocks or other types of investments and positioned themselves directly in gold and silver. And at that point, oil prices also rose sharply. And the Middle East is, in this respect, a key region for global energy supply. And when tensions arise there, the energy markets, of course, react immediately. At this point, it's not just the energy markets, but also the supply chains behind them, because this also leads to disruptions developing. And this is exactly where the chain reaction begins, which many people feel in their daily lives without actually seeing or understanding the connection. Because when oil becomes more expensive, transportation costs rise. Higher transportation costs in turn make production and supply chains more expensive. And in the end, this also causes prices for food, travel, and many other everyday products to rise. And that's why a geopolitical conflict can very quickly lead to additional inflationary pressure. We're already seeing it now. We go to the gas station. Yes, diesel or gasoline is already over 2 euros. And I myself can still remember the time when I started my driver's license at 18 years old. Back then, I was still filling up for 1 euro. So that was the dream time back then. Now the whole thing has already doubled. And it's precisely because of situations like these that we then, at the end of the day, all these side effects also impact the population. And at the same time, the central banks are also facing difficult problems. That has to be said as well. Because on the one hand, they are, of course, trying to control inflation. On the other hand, they can't raise interest rates indefinitely because many countries are heavily in debt. And history shows time and again that geopolitical crises, inflation, and financial uncertainty are closely linked. And it's precisely during such periods that safe assets come back into focus, those that exist independently of political decisions or monetary policies. And that's why physical gold has played a special role for centuries as a safeguard in times of such economic and geopolitical uncertainty. And of course, it is important to remember that the price can always go down again once things begin to stabilize a little bit more. But looking at the situation in the long run, such an incredible amount of wealth and so much paper money has been printed by governments to finance everything somehow, that in the very end, all of this extra currency inevitably has a significant effect on the economy once again. The debt keeps getting bigger, even more money is pumped in, and inflation rises. And what remains in the end? Of course, holding physical gold acts as the safest long-term asset available, which then stands to benefit significantly from the cumulative impact of all these effects.
Because anything digital can quickly disappear. And with that, since we're already on the topic of digital assets, if you now invest in digital assets or in assets like gold ETFs or similar, it should also be mentioned at this point. Bitcoin and all of that, and anything digital can quickly disappear. And by that, I mean specifically all those gigantic computers, data centers that ultimately keep the entire digital system alive. And that's something you should especially think about. And we are now once again feeling how fuel prices, food prices, and flight prices have risen enormously. And at the end of the day, it's always important that you counteract this. The central banks are doing this too, so you should follow their example. Build up your own gold reserves on a physical level. Then in the long run, you can sit back and relax. And with all this generational debt, which in the end is somehow shifted onto the younger generation, don't participate, don't just watch, secure your own future instead. And then you will benefit from the next super cycles in gold and silver.
Thank you, Nicola, for your assessment. Here we see US dollars per barrel, so prices are rising sharply. All right, we finished discussing the USA-Iran topic. Now, while the situation in the Middle East is completely escalating, here in Europe, we are experiencing a very different kind of pressure. Inflation is making a strong comeback or returning even more strongly than expected. Christian, what do the current numbers really mean for us? And perhaps even more importantly, how accurate are the current numbers at all?
Yes, that's really the million-dollar question, so to speak. And it's also quite incredible when you look at these charts. And you can always see the date. It's absolutely incredible what all happened in February. February 2022, or now March 2020, as you all know, what happened back then and what then came our way. And Marc also shared it with us in his post on X, as he showed us today. Shared it with us. So now it's March 2026. And now let's see how things develop from here. Down there with the whole situation. Because otherwise, if things don't calm down soon, we're going to be handed a dramatic Easter present. Because let's look back at ourselves in the EU, away from the Middle East, and see what's happening here with inflation. Because a lot of people believe right now, well, probably not anymore, since it's already starting to get out, but many still think that inflation is actually already under control. But many still believe that inflation is actually already under control. At least that's what the official bodies say, the ECB, as I already mentioned today. They're making us believe that prices are already moving back toward their target value of 2%. Yeah, but I don't believe that. The current figures already show a completely different picture. And these are numbers that were recorded even before this war situation arose. Because in February of this year, core inflation already rose sharply again. At first glance, that might not sound like much, 2.4%. But when you know that all of this is already being sugar-coated, it's actually dramatic, because core inflation doesn't include highly volatile prices like energy or food. So it should actually be much more stable, since it reflects the more stable prices in the economy. Rents, services, everyday expenses, but prices are already continuing to rise in these areas, and the upcoming increase due to the energy crisis hasn't even been factored in yet. Because this increase I'm talking about happened before the current energy crisis. So what can we expect? At the very least, a hefty taxation without legislation. I believe that's also a quote from Mr. Friedman. I think Marc mentioned that today, or in another presentation as well. I think that saying is quite good. A hefty taxation without legislation. That's what inflation is. And it probably couldn't be put any better. And for many people, the word inflation is still something abstract. We could also call it rising prices. Maybe that makes it clearer so people can picture it more clearly. Because even if inflation were only 2%, which the ECB says is the target, even then, if you have 100,000 euros in your account, you are left with this tiny inflation. Even after 10 years, you only have a real purchasing power of about 80,000. So it's dramatic how this multiplies exponentially and eats everything up. And at the same time, the interest rates on your money are not rising as much because, of course, the states themselves are already so heavily indebted that if interest rates were to rise, the debts could no longer be paid. And that's a dramatic dilemma, how to get out of it. At the moment, the only way out is by taking on even more debt, financing debt with more debt. And that's where the tension of our times arises. We are in the final phase of our monetary system, as we've often discussed, this exponential increase of money, because money is no longer backed or secured by anything. And this just keeps going on. And it's actually a very clever system, the whole thing. It keeps going until at some point it just can't anymore, but it will go on for a while longer. But now inflation is once again coming our way. But interest rates will probably remain low now. So saving, keeping cash in your account is a bad idea. That means a loss of purchasing power if you even have any money left to save at all. On top of that, of course, are all the political risks we've already talked about today. And inflation will very likely experience a dramatic and significant increase once again. And therefore, the urgent appeal that I want to make to you today is this. If you are able to do so, please think carefully about how you can safeguard your hard-earned financial assets against the inevitable loss of your future purchasing power. I'm not talking about speculating or getting rich quick. No, simply about protecting yourself against loss of purchasing power, against this inflation. That's what's important. You don't have to do everything at once anyway. Gradually just buy a little gold from time to time, a little silver, here with us, there with us. And over the long term, that will do you a lot of good. And I'm not saying this just because I'm in this business too. I am truly personally convinced that this is the right thing to do. If you use gold for saving, you are protected from inflation. And finally, I have one more important thought since I've already quoted Marc so often. I wanted to share this with you today, primarily because I vividly remember him mentioning to me during a deep and thoughtful conversation we had a while back that inflation isn't just a simple economic concept, but is actually a force that silently robs every single one of us of our limited and precious lifetime. You really have to think about that when you consider everything, because you have to work even more, since everything you have worked for becomes worth less. And when you keep that in mind, you should do everything you can to protect yourself from this evil monster called inflation, because this monster will probably return faster than any of us believe. And please, if you remember nothing else, tomorrow, except for this one story, then protect yourself from inflation. And with that, thank you, and back to you, Stefan.
Yes, thank you, dear Christian, for holding the truth up to our faces, so to speak. Because you really don't hear anything about this in all the, let's say, mainstream media. And that brings me to my next topic, namely our next survey. The question is, and I hope it's already displayed for you, which media are still relevant to you? There are many. Social media is one of them. By the way, social media. We also have a social media channel here. Please follow all of them. Maybe our production team will display the appropriate slide. So vote here. We'd be interested to know, or you can also take a look at what others are voting for. It's a really exciting thing. We're coming to the last point of today's presentation. Our Q&A session will begin shortly. And here it's about the fact that, of course, the economic and geopolitical dynamics are increasing enormously. And this has also had an impact on gold and silver, as we've seen in recent days and weeks. Nicola, maybe you can give us a brief overview. Where do we currently stand and what is coming up next for us?
Thank you for the question. In fact, it's not just you, dear Stefan, who asks me this question, but also my clients, friends, and acquaintances on a daily basis. And yes, why do prices sometimes go up, sometimes down, or barely move at all, even though the world is actually so turbulent politically and economically? And the answer isn't found in the headlines. Rather, it's found in interest rate policy. And this is not a new realization, because if we look at the year 2022, we saw this very clearly. Despite major conflicts and inflation of over 9% in the US, gold and silver also fell at that time. The reason: the Federal Reserve massively raised interest rates from virtually 0 to over 5% in a very short time. And high interest rates mean that investors can achieve real returns with overnight money, that is, with bonds or fixed-term deposits. And in this environment, gold temporarily loses its attractiveness, at least on paper, because many investors flee to bonds or other assets or financial products. And that's exactly what we're experiencing again today. The market has recently pushed back its expectations for interest rate cuts significantly. And just a few weeks ago, 2 to 3 interest rate cuts were priced in for 2026. And today, the majority of market participants expect at best 1 or even none at all. And that explains why gold and silver are currently stuck in a sideways movement. But, and this is crucial, I see this as a short-term phase because the structural reasons for rising precious metal prices are stronger than ever before. We've already explained this a bit in the webinar, but let's take a look at let's take a close look at these 3 facts. So first, the private credit market is showing the first cracks. Because large fund providers are restricting withdrawals and bank stocks are under pressure. And in recent weeks, the Federal Reserve has added another $10 billion to its balance sheet. That means it is buying US government bonds to keep interest rates low. And why? Because interest payments on US government debt have now reached $1.3 trillion per year. The system can no longer afford permanently high interest rates. And if the credit crisis worsens, the Fed will have to take countermeasures. Marc also mentioned this a bit in his webinar. With the ongoing endless credit, with the credit bubble, so to speak, and the rising the rising increase in further debt or the expansion of the money supply. And historically, that has always been a strong driver for precious metal prices. Secondly, the oil price, as long as it remains high, and it currently does so. Due to the tensions in the Middle East, the Fed has little room to maneuver. But if the situation stabilizes, it opens a window for interest rate cuts and thus for the next upswing in gold and silver. And historically, gold and silver have performed exceptionally well in the 5 years with the strongest oil price increases since 1917. And thirdly, and this is especially interesting for silver, the industrial demand. So silver is not a pure precious metal. It's a bit different from gold. It is also an industrial metal, and the market has been in deficit for years. More is consumed than produced. And even if maybe demand drops in the short term, it doesn't change the structural scarcity. There are even indications that the US government is strategically buying silver by now. And the mining company Hecla even sold silver in the last 3 months of 2025 at an average of $70 per ounce, significantly above the then spot price of about $55. And this really shows that someone is willing to pay above market prices to secure silver. Even at such prices, the industry continues to buy silver. That means they are not price sensitive at all because they know how the system is going to develop. They know what cracks the system has and where prices will move in the future. What we're experiencing right now really reminds me a lot of 2008. Back then, during the financial crisis, there was a massive setback in gold and silver. And many people thought that was it, more or less. But what followed was the strongest upward movement in the modern history of precious metals until 2011. And the important thing is, gold has been at a historic high since December 2024, measured in US dollars, and silver has more than doubled in the last 2 years. So, of course, there are setbacks which we are seeing now as well, but compared to other asset classes, gold and silver are holding up extremely well. And while the stock markets are crashing, silver currently remains in third place among the most valuable investable assets by market capitalization. You can easily Google that as well, by market capitalization. And you can see that gold and silver are right at the top. And gold and silver together now make up 62% of the value of the top 10 assets. That means more than the individual US stocks. And what does that actually mean for us? It means that this shift we're experiencing right now is real. You can see that the system is inflated. Even the Federal Reserve is, let's say, a bit confused or under pressure because they have to respond accordingly with interest rates. And regardless of whether it's through interest rate cuts or rising inflation, gold and silver remain bullish. And between 1980 and 2002, we even had positive real interest rates. Real interest rates and precious metals were in a bear market. And since 2002, with negative real interest rates, the bull market has been running. And it still isn't over. That means short-term setbacks or corrections like the ones we're experiencing right now are normal. You should take advantage of these and buy more. And I actually experience this daily in my work, that many people are just now starting to seriously engage with physical precious metals because they understand that interest rate policy, government debt, the loss of significance of the dollar, these are all developments that have been unfolding over years and will continue to do so. And physical gold and silver are exactly the building blocks, I would say, in a portfolio that have their place in this environment over the long term. And of course, which you will continue to benefit from in the long run. And accordingly, we will also see new highs or even new all-time highs.
Thank you, Nicola. I'll take the opportunity to jump right in here, and we'll proceed directly forward to the situation reports. I just saw an exceptionally intriguing and relevant question that aligns itself absolutely perfectly with your current topic of discussion. Of course, I want to bring it up right away because maybe there are one or two things you just explained that weren't fully understood. I'll quote, "I don't understand this. War in Iran, oil is skyrocketing. Why is gold falling?" You've already explained this a bit, but maybe you could go over it again.
So intuitively, you would think that crisis equals gold going up, but of course the market doesn't work that simply when it comes to geopolitical shocks. As we're seeing now, countries often quickly need liquidity somewhere in such situations. And at the same time, oil prices often rise sharply, which fuels or drives up inflation expectations or even the actual inflation rate. And that puts central banks under pressure. I've already explained this a bit about keeping interest rates high. There is always pressure to keep interest rates high. And every country has gold and uses it during such phases. And at some point, they have to draw on it. For many, gold is the most important reserve. That's something you have to recognize at this point as well. You could also see that in the figures. Central banks are buying at record levels. And by now, for every country, or rather for every central bank, gold is actually the most important reserve. And if there are blockades, sanctions, or anything similar, they have to use gold. So somewhere until new money is printed and can be used again to buy back the gold that was used, and when the gold is bought back again, which we always see, then prices tend to rise as well. That means debts are once again reaching record highs, and accordingly, the gold price is also reaching record highs at the same time. And at the end of the day, all of this is somehow also tied to the interest rate decisions of the Federal Reserve. Historically, we always see this happening. However, gold does not react immediately, but with a bit of a delay. The crucial factor is an oil shock like the one we are experiencing now. Christian has already mentioned this as well. This affects about 20% of global oil trade. And if this continues, it will lead to, in the long term, more debt, more monetary policy. And that's exactly when gold comes into play again. And that means in the short term, there may be price declines. But you should take advantage of exactly these declines. Because in the long run, as mentioned, due to the reasons stated, we will then new all-time highs.
Thank you for the detailed explanation. Maybe this helps the viewers understand the whole thing a bit better. But I already have the next critical question. Does this honestly mean that gold doesn't protect at all during crises, or what, Mr. Trinker?
Yes, what comes to mind now is a human life. How long is a human life? 80, 90 years? Maybe if things go well. Gold has existed for thousands of years, and it has always preserved its value. But, well, I can just say that offhand for now. But to give the dear questioner a really good answer, you have to look at it in relative terms. Because just recently, I just turned around twice, gold was at 2,000 euros just 3 nights of sleep ago or so. And now we're still at almost 4,000. How can you say gold doesn't preserve its value? So you really have to look at it a bit. You have to see the whole picture. And as it is right now, when the economy is doing poorly, also as Nicola explained, and many big and small ones. If you have no money and then need cash flow and then have to fall back on your gold reserves, that's what gold is for. And to our delight, you can then buy back in at a good price. We are still living in a time of exponential money creation, and we will soon see gigantic new monetary programs again. So believe me, this isn't a fairy tale, I'm telling you. All of this will be able to be implemented again very quickly. And then there will be new all-time highs again. The crucial thing about gold is that it's not a short-term bet, not speculation, not a derivative. It's a long-term safeguard. And that's exactly why many people rely on regular purchases, regardless of whether prices go up or down, and not on timing the market. So please don't get nervous, but understand what you are using gold for. And that shouldn't just be for next month, but for the coming years. I hope the answer helped you a little.
Yes, definitely. And maybe you could explain the regularity in more detail again. Regularly, the advantage here is that you benefit from an average price. And as Christian said, you don't wait for perfect timing. Sometimes you buy at a lower price, sometimes maybe a bit higher, and you end up with a nice average value where you really can't go wrong. Next question, can gold continue to fall in a crisis like this, Nicola?
So to put it briefly, yes, gold can of course continue to fall in the short term. And often after a strong increase, a short-term correction is also normal. Of course, it also depends on which players or big players have their hands in the game in such a situation, because it should also be mentioned that in order to move the market, it often happens somewhere on the paper market. Yes, I've always talked about the ratio between paper and gold, that for every 1 ounce of physical gold, there are also 140 ounces of paper gold. In addition, this paper market can, of course, also influence the price to some extent, because if investors are under financial pressure, they may have to sell their positions quickly. And that can, of course, push the price down again. And you always have to look at the whole thing from a long-term perspective, as Christian already mentioned. That means in the short term, there can always be setbacks. You should take advantage of exactly these setbacks. And now, don't panic. Don't let yourself get panicked, because at the end of the day, it's always the long term that counts. And if you look at the major drivers, debt, geopolitical risks, structural inflation, they all still clearly speak in favor of gold and silver. And in my daily business, I now also see that customers tend to use such phases to buy more. I think Trinker and many other colleagues of mine see it the same way. That means, since we've now been in this industry for quite a long time and have gained experience, you can see that customer behavior has changed significantly here over the years. That means customers buy and hold because they've seen how things have developed. Because gold has risen by over 160% in the last 5 years, and silver even by over 170%. Then here you can clearly see the strength where even most stocks and cryptocurrencies can't keep up. And be careful, there are also a lot of channels that talk about astronomical price developments. There may be a small spark of truth in that, but we always look at reality, of course. And it is precisely this reality that we show you in such webinars. And very importantly, don't panic during such price declines. You are welcome to call us. And we will also explain the reasons to you and what the current situation is. And as I said, make use of exactly these moments. Take advantage of them to buy more or to get started, just as Christian already mentioned. Maybe you'll wait 2 or 3 more days, or maybe you'll just sleep on it overnight. And the price has even been at 5,000 euros before.
That's exactly what was said. And yes, when prices go down like this, that's always the topic. Now the question comes up, or rather the statement comes quickly, oh, something is being manipulated again. And I also have the question, what do you think about the accusations of market manipulation by major banks like JP Morgan? And what evidence is there for systematic manipulation in the silver market, Nicola?
Good question. Yes, I get that question all the time, and many large clients call me, or rather, we also like to chat among ourselves in the community about what's actually happening in the market. And there are, of course, public cases and also evidence, this should be mentioned, where all of this is explained. Above all, so-called spoofing, you could say, by large banks like JP Morgan, where paper orders were deliberately placed in order to influence prices in the short term. So that means you place orders and then sell them again shortly after. And of course, that can lead to price changes. You have to keep in mind that these orders are usually not for just 1 ounce or 1 gram. We're usually talking about amounts in the billions. And of course, there were heavy penalties for that as well. This is not a rumor, you can look it up, but the crucial point is that this does not automatically prove short-term market distortions are a permanent global price suppression lasting for decades. Because at the end of the day, you can see the trend, as I mentioned earlier, over the past 5 years, it's up more than 160%. And it's the same with the price of silver, which is up over 170%. So from that perspective, in the short term, there can always be some kind of price suppression happening in the market. But at the end of the day, when trust in this paper system fades, even the big players no longer have the ability to just toss paper around. Instead, even then, the big players still have to rely on the physical asset. And that's exactly what's relevant, because in the background, the big players and central banks, of course, also trade in paper gold. But in secret, they are already buying up huge quantities because to some extent, they no longer trust their own system. And in the end, as I said, what really counts is actual ownership. And accordingly, you must always make absolutely certain that you are in it for the very long term ahead.
Great answer, in my opinion, to this complex question. Market manipulation, an important topic, although actually rather irrelevant for private investors. Now, in addition to buying, there is also the matter of storage. Here's a related question. Why do you recommend owning gold and silver physically and storing them outside the banking system? Which secure jurisdictions are particularly suitable for this, Christian?
Exactly. So now maybe, first of all, let's take a look at the banking system and why you should operate or store assets outside of it. No, not because we believe the banks are the bad guys and we are the good guys. This is actually very well founded. The real reason is that banks, and this is without judgment, it's simply reality, banks operate in the world of paper systems. That is the paper system. And this world is going to undergo major reforms. It will have to undergo major reforms, and it is being digitized, as we have already heard today. This is all part of a paradigm shift right now. And that's where digital money comes into play. Digital money, the digital euro, or whatever the actual name will end up being, it will come, and then perhaps, or almost certainly, it will only be controlled by the central bank. So one bank, and many banks will become unnecessary. You always need some. Many may reinvent themselves and offer something else if that's still possible. But at least it's good if you're not affected by it when all these banks disappear and shut down, or are simply taken over by the governments or the central bank. So in the long run, this is not good. Therefore, the first part of my answer is you should plan for independence from banks. Precisely for that reason. So, and I think the first part was about why you should own gold and silver physically. That also has to do with the paper system again, because there are, after all, countless paper systems. And that's actually smart. And many, especially the banks, among others, make a lot of money from it. But we've already heard today the ratio of physical to paper is incredible. 1 to 140, I think Nicola mentioned. And there's only a minimal amount that's real. In the end, only what's real survives. In the long run, only the real thing remains. And the locations. Our high security vaults, if you consider the jurisdictions where you should store things, the locations of our high security vaults are chosen based on where the money moves to. Because money always knows where it's safe in the world. And that's where we have our high security vaults. And in case something changes, we also have a certain degree of international flexibility. I've already mentioned that today. And those are the two most important points. And that's where you have real security. I've addressed that question.
Since you just mentioned it, here's another piece of information. As I said earlier, the ratio of paper to physical for gold is 140 to 1, and for silver, it's actually 380 to 1. So you can really see how inflated it is, the whole paper system, and the only question is how long it will last.
Yeah, and funnily enough, that's also the thing. We all live with this terminology. We say paper systems, but it's not really made of paper anymore. It's actually just digital
Assets.
Yeah, but that's just how it is. That's
From the past, you know, when you would get a paper certificate if you bought silver on the market, that's where it comes from. Yeah.
Or like a savings book. In the past, you actually got the savings book in paper form. Nowadays, you have a savings account, and that's only electronic as well. That's
How it is, exactly. That's why, dear people, physical assets are what count.
what will happen to all the safe deposit boxes if there are no more savings books? Gentlemen, but that's another story.
Another story. Maybe we'll get to that in one of the next questions. So what else do we have here? Yes, maybe the political actors we currently have. What role do political decisions and unexpected events, for example, wars, social spending, in the future development of debt? Nicola, please.
Yes. So regarding debt development or the current debt status, I think Marc has already talked a bit about it today. Christian has said something, and I have also said something. But you have to ask yourself, where do all these mountains of debt come from? And you can say that everywhere political hands are involved, something is happening. So the mountains just keep getting bigger and bigger. And you also have to say, unfortunately, often to the detriment of the population. Of course, there are a few exceptions, a few exceptional politicians where things are considered in a positive way for the population. But the background to all these mountains of debt is that everyone always wants to spend a lot and keep spending more. And especially the politicians who control the whole system want to spend a lot. Because we just have to look at the past few years. Special funds here, emergency aid there, and has any of it been paid back? No one has paid back anything so far. That's also the question, because it's not considered necessary. It always says in the fine print, and they just print fresh money to spend more again. And the question for Christian here, if you had a money printing machine at home, would you print money just like that, or would you just let it gather dust? So at this point, what would you say?
And I'll tell you after the...
It is a webinar. That is exactly right.
Maybe I have one at home.
Yeah, maybe you have one at home. But these politicians also know that this very system will eventually come to an end. That's why they're also developing a new system somewhere in parallel. And that's exactly why they're also buying up these huge amounts of gold at the same time. So on that side, it's always kind of a cycle. That means they already see the end coming, but they're buying up security for themselves. Then they develop a new system and continue to buy these securities with this new system. And this cycle just keeps going. And as I said, at the end of the day, these amounts of money will continue to explode. And of course, the politicians will exploit this instrument for as long as they can. But that's exactly what we see in the development of the gold price, where all of this is leading. We've already seen it in recent years where the whole thing started to become exponential in some way. And I would say we gold owners, or you out there as gold and silver owners, can just sit back and watch all of this unfold in a relaxed manner. Whether it's from a paradise, as Christian, what should I say, has recommended to you at heart, or in Dubai with us in the high security vault, or even in Singapore. And this is exactly where an important appeal to you out there comes in. The big problem somewhere is also generational debt. We have to say that as well, because at the end of the day, it's the younger generations who suffer from all these games that are being played. And that's why we always say, don't take part. With this generational debt, protect yourself and your loved ones, of course, with real security. And what has proven itself for thousands of years? Christian already mentioned it. What has stood the test of time for thousands of years? Physical gold and silver. It's that simple.
Exactly, because that is the mirror image of the fiat money systems. It doesn't increase on its own. Rather, it simply reflects one parameter, how we are currently doing in terms of fiat money. Let's move on to the next question. Dear Christian, what would be the biggest mistake one could make given the current price developments?
I truly feel that I have to say this to you with all the due respect in the world, and please understand that I really mean this quite kindly and very sincerely, but what could potentially be seen as the single biggest mistake you could possibly make right now is believing all those many different webinars that just seem to spread fear and anxiety among people, because that is simply a calculated form of marketing. And in the end, it won't get you anywhere at all in your journey. Fear is the worst advisor. So the biggest mistake would be to listen to fear. Fear is always a bad advisor. You can read that everywhere, wherever there is something to read. Those are not good pieces of advice. Instead, focus on what really matters. If you have gold and silver, then you really don't need to be afraid. And believe me, no one has ever regretted it. And when prices are high, people cheer, and when they're low, they cry. That doesn't help. Stay calm. Stick to your strategy. It's important to stay informed. We don't want to panic you. We want to wake you up, inform you about developments so that you can make your own smart decisions and not be ruled by fear. That is the worst advisor. And what you should also do is use price drops like now as an opportunity to buy more. There are really only two possibilities, up or down, but it will always go down from time to time. These are temporary setbacks in the market, and fundamentally, nothing has changed on a global scale. That would have caused these current gold prices. That's why you can rely on the fact that the journey will continue. And you must never listen to your fear. Don't let anyone intimidate or frighten you. Instead, take a moment to deeply think and reflect. Make your own plan. You don't have to sell your mother-in-law now just to have gold, but simply invest regularly in gold and silver with what you don't need for living or anything else. That's the best way to protect yourself.
Exactly. In small steps every month, that already does a lot. What exactly are your customers doing right now? Are they consuming or do they need more?
First of all, thank you for the question. You're in exactly the right place with me, dear Stefan, because I have the exact numbers. And of course, I analyze these numbers daily. And we operate in wholesale and retail business daily in over 20 to 30 countries internationally. You can see some of them here on the slide as well. And I have to say, almost every day, we sell twice as much as we actually buy from customers. Of course, there are exceptional days. For example, let me mention the 30th. January, when the price of silver dropped sharply and many people wanted to quickly cash in on some profits out of panic. And here we had more silver for once. On those days, we bought more silver from customers again, or customers sold more to us. But overall, since the beginning of the year, we have seen this trend in both gold and silver, that customers are buying twice as much as they are selling. I am also in daily contact with major clients who buy large quantities, and they report exactly the same thing. So they say, we're not concerned about small price drops or anything like that. We look at the whole thing from a long-term perspective. That's also what central banks do. They are not price sensitive. And at this point, because earlier you also asked, Christian, what would be the biggest mistake in the current market? The biggest mistake would be not to invest, that is, not to own physical precious metals, especially in a market or environment like the one we're currently in. That would also be, in a way, the biggest mistake. And that's exactly why the central banks are buying constantly. So don't wait. The whole system is already inflated. And the most important thing is to plan for the long term and not to panic because of short-term declines. Take advantage of exactly these short-term declines because, as Christian already mentioned, there's a lot of panic out there. Everyone is always predicting the end of the world somewhere. So we've all already survived the last doomsdays. And that means not to let fear take over somewhere, but instead take action yourself in the long term, plan everything out. Call us, we'll plan it together with you. And I've already mentioned the reasons for the next price increases and the next all-time highs earlier. That means you just have to stay calm and buy.
Thank you. How do you assess the opening of a branch high-security storage facility in Argentina or generally in South America in the context of the current political and economic developments? Christian.
Thank you for the question. At this point, greetings to all viewers in South America. There are many, 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 and everyone who sees me now knows that. So Argentina. Yes, so Argentina is overall moderately safe for travelers, I would say. Safe, I would say. But you should still be a bit cautious because of petty crime and things like that, especially in the big cities. Physical storage of precious metals in the country itself is, and this is not just my personal assessment. I have also been to Argentina and have learned a lot from other people about this. So, great. The country is, but physical storage of precious metals in the country is, due to the political and economic, let's say, instability and these high security risks, I would not recommend it. It's far too expensive. You couldn't even properly insure it. And why would you anyway? There are safe alternatives at home. There are high security vaults, specialized high security vaults in Switzerland, in Singapore. There are some in Vienna, or there are countless other safe places. So why would you want to put yourself through that stress, that unnecessary stress, namely to then store it somewhere that's not so stable? Because gold, ultimately, you don't keep gold with you, but in a secure place. Then you have the right connection to it. And you don't take valuables to a moderately secure place. You choose a secure place in the world where you have the ideal connection to it. And then you have no stress. I think this question comes up again and again. And after a lot of research, we always come to the same answer.
Absolutely, that's how it is. Could GVS imagine creating a platform where people such as farmers, traders, and service providers can register so that in case of emergency, they can exchange their goods for precious metals to bypass the digital madness, Nicola?
Well, at the end of the day, we already have a platform, goldvorsorge.com, as you can see there. Here you can already exchange the worthless for something valuable. So that's already certain. GVS already has that. And to escape the digital madness, as I said, you can come by and see us at any time. We are also here in person. We are not digital robots or anything like that. So we are sitting right in front of you. We can also discuss everything with you gladly. Back to the main topic. The idea is, of course, interesting. And in the past, there were also similar forms, if I remember correctly. But those were mostly local exchange systems within the communities. So they were local exchanges where services were traded for gold or even chickens for gold. But at the end of the day, you also have to take into account that things are moving toward digitalization. By now, everything is becoming digital, and everywhere the state is involved, or rather, the state naturally wants to have control over money and over the actions of the population. That's probably also why these CBDCs are being developed somewhere. And accordingly, it's also somewhat difficult for such platforms to exist, so to speak, due to money laundering, prevention, and other regulations. At this point, as I said, but Goldversorger already has the website, goldversorger.com. Visit us there, and you can buy valuable physical precious metals with your valuable paper money at current prices, 24/7, anytime. And here I would say you can benefit and relax in the future.
So the worthless paper money, that's how it was
Right about now.
exactly. In a webinar, it was said that Bitcoin is part of the financial system. Now, Mark says that Bitcoin is independent and that you should invest 30% of your portfolio in it, which is correct. And how should this be properly understood? Christian?
Yes, a significant number of customers have been reaching out to ask us about this, especially in the current situation we face right now, precisely because there are so many different opinions out there on the market. But quite simply, both statements, you have to say, are correct in a way. You have to put it into perspective a bit. And before that, I might want to add, the nice thing is we have freedom of opinion, I would say. We didn't coordinate with each other on this. We didn't put a muzzle on Mark telling him what he has to say. Instead, he has his own position, and I respect that because it also contains a core of truth. But as I said, putting things into perspective is important. And what do I mean by that? Yes, technically speaking, Bitcoin is independent because it operates in a decentralized way. And all these things we all know about Bitcoin. It's not controlled by the central bank. But the crucial point is there is always access to the financial system involved. And when you convert it into money, or vice versa, when you buy Bitcoins, that happens within the financial system, into the system. And that's where the regulations come in, the custody, the exchanges where you keep it. All of that in the end is once again controlled by this system. That means in practice, you're still dependent. And 30% is, as I said, I respect the statement from the market. That's his statement. I find it a bit aggressive. I think it's a bit much. But I also think you can always gamble in the short term anyway. I've said that so many times already. In the short term, anyone can go to the casino. But many of my listeners also know my personal opinion on this, where Bitcoin comes from, who invented it, and so on. We could discuss that for a long time now, but Bitcoin just isn't right for everyone. But it's definitely clear that it's more like a dealer than gold, with strong fluctuations up and down. Many of our clients see it that way too. I don't have any, but it doesn't matter what I have. A small portion can always make sense to mix it in. But with physical assets, it's just that they have an intrinsic value. At least that's how I see it. There, you don't have any digital risk. No access to a system is necessary. And ultimately, it comes down to weighting it correctly. Everyone has to decide that for themselves. But you can take advantage of opportunities, use opportunities, but in the end, the goal should always be security and long-term stability, not speculation. That's how I see it. But of course, that's just one opinion among many.
Exactly. And in our webinar, we absolutely do not forbid any opinions. We allow all of them. And everyone, as Mr. Friedrich also has, of course, he emphasized several times, it is absolutely essential to form your own opinion. That is the basic prerequisite for being able to participate and join the discussion. And that's why we make this appeal. Yes, dear viewers, that was the last question for this evening. Thank you to the experts who stayed with us until the end. Thank you for taking the time again today to participate and for helping our viewers a bit more, whether in everyday life or with the current financial system. Ladies and gentlemen, thank you for your time and for sticking with us for so long. And we'll see each other again in the next 4 to 5 weeks at our next webinar. It will most likely take place in the last week of April. You can register again at webinar.goldversorger.com, and our team will display that again right after this. The registration page will be shown again so you can participate next time as well. We have already received many questions about whether there will be a recording again. At this point, I'd also like to say, yes, of course, there will be one again. There will be another recording. In the next few days, it should be sent by email to all registered email addresses. As I mentioned earlier, by the way, the result of the survey was that most people follow us on social media, YouTube, Instagram, TikTok. We have all of those. Please make sure to follow us. If the majority says that they are active on these platforms, as we see here, please be sure to follow us. Here you can see Mr. Trinker and Mr. Draguljevic in multiple appearances on many different current topics. Please don't miss out on anything there. That's it for today. I bid you farewell with wonderful best regards from Vienna and wish you a good night. Greetings and good evening. Thank you very much. Good night.